All right. Hello, everybody. Welcome back to another edition of Nvidia earnings. We're probably going to be doing this for a very long time. I think this is like the fifth one we've all done together. So very excited to be here with everybody. This is Nvidia Q2 2025 earnings. We got the market that's not really having that much fun. A lot of high beta names are taking a 5 to 10% hit today. I think it's because the entire market is afraid of what Nvidia is going to put up. Kind of some pre-earnings jitters, which tends to happen on the days when Nvidia reports. But in the next 30 minutes, we're going to see what Nvidia reports. I'm here with Jose, Tanner, Neil. We got a lot to talk about. Tanner, how you doing?
Doing awesome, man. Do I sound a little quiet? My bad.
You're good. You're good.
Yeah, doing amazing. Cannot wait to see these earnings. Cannot wait to not only see the numbers, but also hear from Jensen, because we always get some pretty great remarks from him that will not be on the initial numbers that we end up seeing. So let's hear about China. Let's hear about, data center sales, not only in the United States, but globally. So, yeah, very, very excited. As many people know, SoFi earnings is very exciting. There's a bunch of other names that I cover, but whenever it comes to Nvidia, this is what really pushes the needle. So if you guys see red numbers, I mean, I might be a little bit more quiet because this is the actual financial impact right here. But
Neil, how you doing?
I'm doing well. It's an interesting day. Jose knows I have to buy one share of Nvidia every time we have a Nvidia event. So we're now up to 3 shares, average $142. Let's go. But it's interesting to me to see that CoreWeave is up 5.8% today, while the rest of the high flyers are taking a beating. I don't know if it's me and Jose pumping CoreWeave yesterday, or maybe the market knows something that's coming up later with Nvidia's earnings call.
That is interesting. Today is a wonky day. You got BMNR down 7, Hood down 5, Palantir down 3, and then CoreWeave, which is levered against Nvidia, is up 5%. Nvidia's flat. I mean, I think the entire market is afraid of Nvidia earnings, which in all fairness is, they're 8% of the S&P 500. I get it. But in another 30 minutes, I guess we'll see if they have anything to be afraid of. Jose, how are you doing? And are you ready for earnings as well?
Yeah, I mean, I was on earlier and I kind of shared my excitement for earnings today. Pretty much, I mean, the first thing is I always get excited for earnings, but I got to remember Jensen is a talker. He does kind of take a long time to answer some of those questions. So be prepared that this is definitely not kind of like a rock show event or a rock star event. He's just going to be talking tech stuff. I'm pretty sure chat at one point is going to get bored, but there's a lot to unpack there. And it's going to be a lot of great information for just not Nvidia investors. He's going to talk a lot about kind of the AI market, the AI ecosystem, and you can take that to whoever you want, be it your Nebulas, your Google, your Tesla, and whatnot. So I'm pretty excited to hear just what the overall AI ecosystem continues to grow. Even though we keep hearing it, it's great to hear from the AI king himself.
Yeah. Many of the companies that we follow, especially the popular Mag 7 names, what Jensen has to say has massive impact on many of the companies that are very big in the markets, let alone retail names especially.
Agreed. So let's get started with the coverage. We got about 25 minutes until we get the results. Street's expecting $46 billion and $1.06 of EPS. Those expectations have risen over the past, call it 48 hours. I mean, it was like 45.8. Now it's at 46. So we're going to really have to see what Nvidia comes up with. I'm putting the official pump or dump poll in my chat. So if you're in my chat, we can start off with seeing what people think on a pump or dump. I'll start with you, Tanner. You think Nvidia can beat these numbers? And if they can, how well can they beat them?
Yeah, I mean, the amount that they've been able to surprise on the upside has shrunk. So I don't think that we're going to see some unbelievable beat. However, this period is a little unique with China and the write-offs previously that they had of 5.5 billion. There was some talk about some of those chips maybe being repurposed and everything. Who knows? But regardless, I do think that we will end up beating to the upside. On a percent basis, the actual number, I'm not exactly sure. I don't know if we end up seeing anything too much higher than $48 billion, for example. But I do end up thinking that we will beat Wall Street's expectations.
Yeah.
Yeah, Jose, your thoughts?
I want to say, yeah, I agree with there. I mean, this is a quarter that's very weird because you kind of have a lot of fluctuation happening with the China market. Obviously, most of the quarter we kind of didn't have the Chinese market at all, and pretty much the whole quarter. So it's one of those tricky ones where it's going to be hard to really try to make a number. I just, at the end of the day, agree with Tanner. This is going to be a market. It's going to beat the expectations. The other thing that's going to be wonky is going to be guidance. Are we going to get guidance with China numbers? Or are we going to get guidance without the China numbers? Because there's still so much uncertainty there. We heard rumors about the H20. What's happening with the H20? We're hearing rumors about the B30, B20, whatever you want to call it. What's happening there? So that's kind of within the guidance. That's one of, I feel like when we get the numbers, the guidance is going to say a number and it's not going to tell us exactly what is included in that guidance until the earnings call. So there might be some volatility between the guidance release and the actual earnings call till they give us the full story of what's included and what's kind of thought about that space.
Neil, Jose shared a chart this morning on his Twitter, which I'll be linking in the chat. And I want to get your thoughts on this. I mean, it seems like the most convincing reason Nvidia would have a good quarter is because CapEx increased from 73 billion in Q1 to 90 billion in Q2. Do you think the majority of this ends up benefiting Nvidia?
Yeah, for sure. I mean, of course, there are signs that AMD is growing, but we have not yet seen that AMD huge sequential growth like we've seen with Nvidia. What was it, 2 years or so ago, where we've seen Nvidia grow 80% quarter over quarter? We've not seen that for AMD yet. Will we see it next year? MI400 series coming out? Maybe, maybe not. But for now, yeah, the majority of all of it is definitely going to Nvidia. Jose, well, watch
get this AMD guy out of here for today. It's Nvidia's day.
The CapEx spend has been insane this quarter. I mean, the ramp up has been incredible, and even then, those are some pretty interesting. Well, I mean, they're not handpicked; those are the biggest names, but there still is going to be some Saudi spend as well. There's going to be other areas that are also included, which is very interesting. Let alone if, you know, it's not like they're just a data center play, right? We also have to factor in that gaming is looking very good as well. Like there's other segments to Nvidia's overall business. So should be a very exciting quarter. Can't wait to actually see the numbers though. The unfortunate thing.
Oh, go ahead. Sorry.
Oh no, I was just gonna say that it comes out at 420. So we're gonna have a little bit of waiting, but
that happens every time, right? 420.
Yes.
Yeah. Okay, so we'll have Snowflake and CrowdStrike in the meantime then.
I was going to say, I agree with Tanner here. It's no longer just a data center company. I mean, yesterday they talked a little bit of kind of their RTX Pro servers, which are more enterprise markets. That's kind of picking back up. Right now, obviously, the big customers are the top four and kind of your AI labs. But it's eventually going to start moving away from that. You saw some of those big servers, and then eventually kind of like there's going to be a future where that robotics market picks up. Obviously, the gaming market is still a great opportunity. That gaming, it's still a few billion on a quarterly basis. So that could be one of the reasons they beat or miss certain expectations. Could be just from the gaming numbers itself, even though the street doesn't really care about gaming as much anymore.
Do we think there's... Okay, well, let me ask you guys this question. I asked Jose already. Tanner, like, if you have to pick between a pump or dump, and you have to give me a price range. I know it's all speculative. No one's going to hold you to it, but I'm saying 190. Jose saying 187. What would you have to say on these?
Yeah, it's all on guidance. If we do get some pretty excitable guidance, AMD is not looking at China sales. If Nvidia does, I end up, you know, I think that we end up getting really high numbers, the market getting very excited, but I mean, it's very hard to put an exact price on it. I'll say 190. I mean, I could probably even see more than that if the guidance is really strong, but I think people are going to care more about guidance than the actual numbers that we see today.
Neil, same question for you.
Yeah, no, I think 190 is possible. The difference between an AMD and an Nvidia when it comes to China business is AMD's chips were not, like, even when they got the license, they said it's going to take a couple of quarters to start selling them. I think with Nvidia, it might be a bit different. because I do think they are ready. Like if they got the go ahead, maybe Jose can tell me a bit more. But with Nvidia, I do believe that once they did get, but now they're applying for new licenses, it's easier for them to start shipping them out to China. So I think closer to 190 is possible. The beats are coming for the quarter, but I think it's all about the comments during the earnings call, which I do believe a lot of it will come from China questions.
Yeah, and one thing with the China is AMD had to. I think AMD had to not give guidance because they knew that Trump, whatever people call that mafia tax, was still not alive. So I think AMD just couldn't say anything because if not, they would have to give some reasoning behind maybe some of the margin hits with the AI chips if they were to guide it. I think with Nvidia, I think luckily we now know about this Trump tax for the China market. So maybe they do kind of give us a little bit more insight with the AI China space. And again, that's definitely going to be one of the things we're going to be really listening to. Not only the H20 but the Blackwell version for the Chinese space.
So you're saying that they were back whenever AMD showed off their call, they were probably in the talks, but they obviously couldn't announce anything because it wasn't finalized.
Yeah, I think that's what happened. I think that's one of the reasons they didn't give you the numbers. They knew something was going to happen with the Chinese, but they just couldn't give you like at the 15% tax hit. If, in my opinion, if AMD would have released the numbers, analysts would have been able to done the reverse math and say, why are your numbers on margins actually a little bit weaker in China than previously thought? And the only answer would have been either you're selling them cheaper or somebody else is taking profits. And we ended up finding out what was the real reason. So I think instead of giving those questions because of the uncertainty, I think that's why AMD opted out to giving us the China numbers.
There were also some rumors about the potential of raising the price by 15 or 18% to actual Chinese customers. What did you guys think about that? And do you think that that's going to slow the potential demand from China, or everyone's going to pay that price?
Yeah, so the context of this is the article that came from the FT today, right, Tanner?
Yeah, I don't remember where it ended up coming from, but
okay. So the context here is that basically Lutnick had a quote last week saying he wants China to get addicted to Nvidia chips. China didn't like that, and now this morning you get a lot of tech companies in China saying that they're beginning to buy chips from places outside of Nvidia. I think that's actually going to be the biggest thing about this call today. Very curious on your perspective on that, Neil, because AMD, I listened to Lisa Su on the last call, and very politically correct when asked about China, and we definitely didn't see China numbers in the guidance, or else guidance would have been way better. If we don't see Nvidia numbers in guidance for the next quarter and Jensen kind of tiptoes around it because he just doesn't have the best answer, I think that could be where the quarter ends up just not looking the best because the expectations are so high. Nvidia's at an all-time high, and maybe that's where we get a bit of a retracement.
Yeah, but with the comments from last week, I don't even think this pushes Chinese company to AMD. It just pushes Chinese companies to Chinese names like Huawei, and I forgot the name that popped up today that saw its revenue and profit soar. But then again, it's like a super small revenue of $430 million. It's like Nvidia does 100 times that, I think, for the first half or a quarter or so. So I don't know. There are definitely going to be a lot of questions on China, and Jensen is going to answer it probably in like a 2 to 5 minute answer. He's going to say, look, we are in touch with the administration. We know there is a lot of demand for our chips in China. We got licenses for this one, and now we're trying to get maybe licenses for the Blackwell one. We'll see how things evolve, etc., etc. But we still see a huge ecosystem in China. We still think that 50% of AI researchers or are in the Chinese market. The Chinese market is worth billions, tens of billions of dollars or so. So it's still a very important market for us, and we'll try and do our best to serve that market. I think that's going to be like the politically correct answer. Is it going to be enough? Remains to be seen. But don't forget that the Chinese market is big for Nvidia, but now they do get more revenue from sovereign AI, from Saudis, from the UAE, something that didn't exist before. Could that balance things out? Potentially. I don't see China business going away, to be honest. I think they'll work something out.
And Tanner, to that kind of point of the 18% growth of increased price, I found another article that the main article started from just an analyst projecting how much a company would have to increase the price to do so, and some other article kind of ran with it and said that they're actually going to do it.
Gotcha.
Unfortunately, though, Jensen I think doesn't take questions that really go that deep. He's most likely just going to be like, we're working something with China, so I don't think we'll ever hear the answer to that. I think for the H20, we probably won't see much of a price increase, especially if they really are kind of tuning it out. Maybe for the B30, I think there could be the possibility of maybe not an 18% growth, so they can keep that 1-to-1 margin that they normally had, but maybe some growth. But for them, it's still a profitable business. I think the Chinese space in forms of chips is still like 60% margins based on the quick numbers I was reading. So even if they have to pay the 15% tax, it's still not the worst thing for them. Man, there's
yeah,
another top.
I would take a lower margin top line growth than a full ban, right? Like I'm still very, very positive on what's happening, even if I didn't agree with it whenever it first came out.
Yeah, and I think for Nvidia, as I guess for most long-term investors, it's not just the market itself; it's more that developer ecosystem that's really important there, right? I mean, a lot of developers come from Chinese space, from the Chinese area. So if you lose that market, you're in the future losing potential developers. So as long as you have some ecosystem, that's what I'm more excited about. If you're making money from there, even better.
Agreed. Now, the price action today is very weird. The S&P 500 is up 0.3%. Nvidia, which is 8% of the S&P 500, is down 0.2%. BM&R is down 9, Palantir is down 3, Open Door is down 14, Tesla is now down almost 1%. SoFi is down 3. It was at 2650. IREN's down 3. What do you, Tanner, what do you make of the price act? Is this just people are afraid of Nvidia? Because this is very weird just seeing the S&P up, but like everything high beta down, including Nvidia.
I mean, I don't know. Last week we saw a little bit of shaky nerves as well. I think the market's just in a weird place, but I don't look too much into it. I'm focused on those individual names and the fundamental results, and try to make sense of where this is long term, and then make my bets off that. So where does Nvidia go long term? Where does SoFi go long? Where do all these names go long term that are higher beta names? I think most of them still have very big bull cases. But today I'm focused on Nvidia. I think they're going to do well, and I'm not too worried about how the market shakes out, before the results actually happen. I don't think there's price action enough where people have any sort of insider information. Let's also say that. I think that this is pure speculation.
Yeah, I think that's very fair. And I think this is what happened. I remember 4 quarters ago and definitely 2 quarters ago, where it's just like the market doesn't know. It's kind of like Powell. But like, what is Powell going to say? And then you end up getting Powell saying something good. Maybe we end up Nvidia saying something really good. Maybe it's good, but it's not good enough. And so the price action, I guess, is just waiting to see what these numbers will turn out to be.
Yeah, I think this was 3 months ago. Me, you, and Jose were dancing after the earnings came out, but it was a little shaky before it happened. I mean, like,
let's not forget that we're at all-time highs for various names still. So, 2%, 3% difference today, like, big deal. We're back to prices since lunchtime yesterday.
Yeah.
Unless it's Open Door, then it's like 30% difference. But then again, tomorrow it can go up 50% because Drake suddenly bought a share or whatever is going out there.
Yeah.
And then we also have September coming up, So it's, and a lot of these names, like a Hood, that's up 300% in the past 5 months. Like, all right, it's down from 118 to 103, getting into seasonally weak time. Nvidia could help, but Nvidia might not have any impact. And so we're just really gonna have to see how the market thinks of it. Here's a couple minutes of Josh Brown real quick talking about his perspective. He has held Nvidia since 2015.
Consensus, I'm not sure. I want to start with what we already know. Cloud hyperscaler CapEx is absolutely surging across the board. And we just got reports from all of NVIDIA's biggest customers giving us the evidence that we need to feel confident that that should continue at least for the next couple of quarters, which is why this company is close to all-time highs going into the report. Quarterly CapEx spending has risen from $44 billion at the end of 23 to over $90 billion when you just look at the 5.
You saw the tweet.
Or 5 of the largest customers. So Microsoft, for example, is a $17 billion quarterly run rate on CapEx. Alphabet is $22.5 billion. Amazon's 32 billion. Nvidia doesn't get every dollar of that, of course, but nothing noteworthy takes place without Nvidia being part of it. That's how we got to where we are, and that's what we know so far. What we're going to find out tonight, specifically, in my view, the things that will really matter the most, we have the China situation resolved, so it's really going to be about the sell-through of Blackwell, specifically the GB200, which is the current latest generation. That's the standard, if there's such a thing, AI super chip. It's 2 Blackwell GPUs on a chip with 1 Grace CPU. So the GB200, just to give you an example, Oracle is deploying thousands of these in liquid-cooled racks, and they have already said they plan to scale up to over 100,000 GB200s in what they're building. The next thing, so we need to know how that's selling. The next thing is the GB300. So if you think about the GB200 as, let's say, a Ferrari, this is the Formula One. This is for the largest large language models and for massive workloads.
Do you think, Tanner, we'll start with you, that they need to talk more about the next generation of chips to get the market excited for 2 years out from now?
I mean, they talk about not just the GB300s, but both Vera Rubin and Vera Feynman often. So I don't know if they need to continuously harp on that. They will talk about it some more. But I think the important part is, for me, is total cost of ownership. If the big bottleneck is energy, then you are going to need to continuously have the best possible chips. And that's the way that you're going to increase your total token output, essentially, right? Because that's what every Mag 7 company or hyperscaler has essentially told us, is that the real bottleneck is energy, which I actually think puts more favors for NVIDIA. Obviously, Jose might correct me on that. He knows this space a lot better than I do, but the upgrade cycle will be very real. And as long as that they already did kind of squash out the ideas that, Vera Rubin is behind schedule. If they can continue to do that and say, hey, we're still on target and everything, I think that will also, weed out some concerns for the market as well. But yeah, I don't even really remember your question.
It's just, do they have to talk about Vera Rubin and all that other stuff?
Yeah, I mean, they will. They do every quarter.
Jose?
Yeah, I agree with Tim. I don't think they need to. They're going to talk about it. The only thing is they already did it, I think, via commentary that the Vera Rubin delays were false. Just a confirmation again from Jensen or Colette themselves to really finally end those rumors would be great. The other thing what Tim mentioned is, right now, it's no longer about just saving in the data center. Is the data centers are becoming, with these AI factories, token factory, which is what Jensen has been mentioning. So it's all about revenue collection and revenue, the revenue you can make out of it. And NVIDIA is the best product. A lot of people still talk about NVIDIA's biggest moat is CUDA. That's definitely a moat for them. But I think the one that's driving them the biggest growth right now and the biggest moat for them is their NVLink, the ability to connect one GPU into connect 72 GPUs into one GPU. It is amazing for inference. It is amazing for training. That's why they have this moat in the inference and training space right now, because of that NVLink. And that's helping the TCO dramatically for all these data centers. So in Vera Rubin Ultra, we're going to see some crazy growth there in NVLink expansion. But networking is the biggest, for me, networking is the biggest moat NVIDIA has in this AI era. And just 2 days ago, or 2 or 3 days ago, they announced a new kind of networking solution as well that not many people are talking about, is Spectrum XGX, I believe the name, and it's kind of connecting distributed data centers to make it seem like one giant data center. And it doesn't seem like a big deal, but in the AI space, that is a very, very big deal. So for me, CUDA is great, but I think right now the networking, the connectivity solutions are the moat for NVIDIA, and that's going to continue to help them be the big winners in TCO, like Tanner was mentioning, and just revenue generations for a lot of these cloud players.
Yeah, and the new, I think that I forget what the actual name was that you said, but the new photonic system that allows them to connect multiple of these GPUs also allows for larger order sizing or order sizes as well, which is also very interesting. And then you get tweets like Elon's that says, hey, you know what? Maybe we need 50 million, H100 equivalent levels of compute now for the next 5 years. That bodes very well for names like Nvidia as well. So maybe we see some commentary about order sizes as well from larger customers from Jensen.
I have a different question. Jose and myself, we did talk about free cash flow for Nvidia, which could reach $90 to $100 billion this year. What the heck do they do with that money? Like increase your dividend by 1 extra cent, buy even more shares? What does a company like Nvidia do? Because acquiring other companies, why would it? Other than the smaller one like the Leptons and whatnot. What does a company like Nvidia that's literally printing cash do? Company like Apple, Google, whatnot, you can understand why they're willing to acquire other companies, right? A Perplexity or Mistral, I know the rumors that came out today, or Google acquiring Wiz. But Nvidia, what does it need to acquire? Nothing. Other than Jose's master plan of building their own cloud service and destroying Amazon, Azure, and all the rest. But that's like evil Jose talking. What does $100 billion buy you?
I didn't know Jose had that thesis. That's a quite incredible thesis, Jose.
What did the other Mag 7s do over the last 10 years, right? I guess a lot of buybacks, massive venture funds, some acquisitions as well. But I'm not exactly sure. Now, all the Mag 7 names are actually spending a lot of their cash finally. And that's why Nvidia is where they are. But I'm not honestly very sure, but I think that they'll continue to make more equity bets on certain names like they have on CoreWeave and these sort of names as well.
Yeah, and I think Nvidia has a good problem right now that they're making way too much money that they can spend. My bet is either by the end of this year or by the end of Q1 of next year, so just 3 quarters or so from now, Nvidia is the #1 free cash flow machine. Right now, it's Apple with about $96 billion in trailing 12 months. I think by the end of this quarter, if the numbers I think are going to happen, Nvidia is going to have about $81 billion in trailing 12 months. I think they can surpass and be #1 within the next 3 to 4 quarters. They're only buying. I think the only way is they have to make sure they keep their talent happy. So they're going to be giving great paychecks, but that's not going to hit the bank at all. Giving an extra few $1 million to their engineers isn't gonna do anything. Like Neil mentioned, they're gonna make random small
Jose,
acquisitions.
let me just stop you real quick right
Go ahead.
there, and then we'll continue the conversation. Folks, the market is now closed, and we got 20 minutes until we see Nvidia earnings. For those that are new to the stream,
Let the games begin.
Let the games begin.
We ring the bell at 4 p.m. every day. Let the games begin. Nvidia right here, 181.60. That's down about 0.14%. S&P actually got to an all-time high while Jose was talking at 647.37, closed just below that. Again, very weird price action across the board. Most of high beta took a hell of a beating today. But Nvidia right here, basically flat throughout the entire day. And now we will wait. Go ahead, Jose.
I forget where I was. Nvidia's going to make small acquisitions like Neil mentioned. But again, these are $100 million acquisitions. They're not going to destroy the bank. They're going to make a few, $40 billion in buybacks. And again, it's still not going to destroy that free cash flow that they're doing. So I think if Nvidia ever wants to be the ultimate king, my evil thesis is all these big tech players are building AI chips to reduce their dependency of Nvidia. I think Nvidia is doing something similar with your CoreWeaves, with your Nebius, building up this ecosystem where these big tech players, if they ever go, look, we don't need your chips anymore, or we're going to reduce our orders, Nvidia can say, no problem. I have other players that I can build up really quickly, and we're going to have a nice clouding battle. So I think Nvidia is saving a nice amount of money for any cloudy day that we kind of get in this AI ecosystem, which I don't think is going to happen anytime soon. But if Jensen wants to become a $10 trillion company, I think he can do it by becoming a cloud player within itself.
All right, so we got 20 minutes until we get the report. Before we get the report, we do have CrowdStrike and Snowflake, which are some of the most important companies. We'll take a look at those when we get them. Barbara, thank you for the $20 super chat. Deeply appreciate it. Thank you for being here. Matt Money says, when Lambo? Hopefully soon. Matt, thanks for being here. And then Farza, thanks for the super chat as well. You're up on my parents' TV right now, and we're all watching. Appreciate everyone who is here today. Tanner, Neil, any thoughts on CrowdStrike or Snowflake? We should be getting those earnings very soon. Any expectations that those could make a move up or down?
I have no comments on those names, unfortunately. Wish I could help.
Two
Neil, do you
expensive
own any of
names. I don't own any of these, but I mean, we both follow Snoke for a while because it has been compared to Palantir for a long time. But Snow, I think they beat. I think they grow quite fast. I think we're going to enter like this period where software type of names, like we've seen yesterday with MongoDB, crush expectations and go up. What was it, 30% today? Something like that. I don't know. I'm not saying that Snowflake will go up 30%, but they've been doing quite well business-wise over the last couple of quarters. CrowdStrike, I mean, since the July outage of last year, business has been doing incredibly well.
Yeah.
Stock is up higher than where it was previously, although it did reach $500, I think. But cyber is very expensive. Like cybersecurity stocks are very, very expensive across the board, other than Fortinet. I think that's the only one that's actually cheap. But all the other names, you're going to pay like a huge, huge premium. Most of them are still unprofitable. They do generate free cash flow, but operating margin is still negative for the majority of them. But CrowdStrike is an elite company, so I guess you're paying a premium to get elite execution and an outage once in a while that screws up everything. But
for those asking if Nvidia has made any reports, it doesn't move till, well, it'll move, but there's no reports till 420. So any of the after hours action you're seeing are just people speculating until we get the report. We do have Five Below. They are up 4%. This is kind of like a discounted version of a dollar store. They beat EPS by 30%, 81 cents versus 63 expected. EPS is up 50% year over year. Revenue is up 24% year over year, 1 billion versus 996 million. And this one's important because this is for the state of the consumer that's a bit more low income, along with Dollar Store, Dollar Tree. So seeing that their earnings are decent and guidance looks like it's okay, that one being up 5% is actually not too bad for the earnings we got today from them. CrowdStrike and Snowflake, we are still waiting for. Those are not out yet. We do have Nutanix, which is another SaaS company. EPS is up 37% year over year, beat by 12%. Revenue 653 versus 643, beat by 2%. That stock is down 7%. All right, so it looks like the street is not a fan of that one. 74% of the audience says pump over dump. Tanner, is that too much euphoria in one direction?
Yeah. I mean, to some degree, it does sound a little bullish. Hate to always be on the side where everyone is expecting good results, but I think this time, just based on the actual capital expenditures that we're seeing from the big names, I think that's what's getting everyone excited. So I can see why people are very happy. Wow, what's going on with Snowflake here?
It looks like we got a pump. Let me see if
Software's not dead.
Wow, this is a big one, dude.
EPS beat by 30% and revenue beat by 5%.
Yeah, 35 cents versus 27 cents expected. 1.1 versus 1.09. Revenue's up 32%. EPS is up 94%. Software is not dead.
Nope. Which bodes well for whoever is bullish on Salesforce and Adobe, because these two stocks have been crushed and are quite cheap. But of course, they don't grow that fast anymore. But yeah, to change I have 69% say pump and 31 say dump. So a bit less bullish to balance things out, but still 69% is a nice number.
That's the marker for a Mit's chat, eh?
Yeah, exactly. Well, let me know if anyone owns Snowflake in the chat. This is good, even if you don't own it, because like you need software to participate in this market. Salesforce, Adobe, like even though I don't own those stocks, I don't want to see those massive companies just like not make a move in this bull market. So it is nice that Snowflake's getting a bid. MongoDB yesterday got a bid. I think it ended the day 30%, 37%. Wow. So definitely, and all of these guys are using Nvidia chips in one way or another, even if they're not directly buying them. They are buying compute from the hyperscalers and AI workloads. So definitely does feel bullish that software is catching a bit of a bid right here.
The world's beginning to run on Nvidia.
And the great thing is with these software players is these are usually mainly enterprise players that are the customers here. So it kind of gives you that top level overview that the enterprise ecosystem is starting to adopt this AI space, which is something that usually the enterprise market kind of takes its time before adopting. So that's pretty great, and kind of goes with what we heard a few days ago from Jensen when they released kind of more updates on that RTX Pro server. Somehow I had to bring that earnings back to Nvidia, but it has to be done. It's Nvidia's day.
You find a way. Krupa, thank you for the $20 in Tanner's currency, the Canadian Dolores. Thank you, Amit, and the guests for covering the Nvidia earnings. Krupa, thank you for being here. Tanner, when was the first time you bought Nvidia? Like, how long ago has it?
December of 2018.
Jose, are you before that or a little around the time?
I have to look at my thing, but it's around that time era too, in the 20
It would
teens.
be around the same time because it was a pretty interesting catalyst because they came in with bad results because Bitcoin mining crashed. So they ended up having quite bad results, which I think led to a near 50% drop. That's why there's a lot of people that ended up getting in that time because they were brave investors that were buying just incredible dips.
It was also around the time with like the first Trump and China war with the semiconductor market as well. So those teens, 2017, 2018, were pretty volatile for a lot of different reasons. So it got pretty exciting for semiconductor investors.
I might not hold a lot of shares today, but I also bought, but in 2019, because there was also a crash. I think they had issues with their gaming GPUs, and there was like some reports that came out, stock crashed. I remember this because I told my manager back then, I bought Nvidia. I think it's BS what's happening right now with the stock. Little did I know what's going to happen later. It did 4x, but I could have made a lot more than a 4x, but it is what it is.
Yeah, AI was not a part of my bull case back then. It was just, semiconductors were going to be in everything, and I was a kid that was on his computer all the time, and I had the 970 back in the day, or the 770. I forget which one it was at the exact time, but I got into it for the gaming side of it, and then the Bitcoin mining part as well, not knowing that more custom silicon would be built specifically for Bitcoin mining, and then AI continued to take off, and so you just hold. That's why I always think it's funny whenever people go, "Hey, what price are you going to sell at?" It's like, well, I have no clue what these companies are going to be up to if the price is to accelerate to those levels. So the bull case has always changed for me on Nvidia, and I'm probably more bullish now than I was back whenever the price was so much lower. And I've been adding aggressively ever since as well.
Yeah, I mean,
Michael says my friends want to go to lunch and they don't understand how much of a big deal today currently right now. Dude, none of our friends get that in the next 10 minutes, the amount of money that is going to go either up or down, projected to be about 270 billion, which that's going to affect a lot of us as well. It's going to be a big day.
Yeah, I had to send my little one to my parents' house. That's where he's at right now.
Wow.
I was like, I'm sorry, bro. I have
your
to
kid out of the house for Nvidia, bro. Goodness gracious.
It's just so he can have more fun with his grandparents today.
No, it's so you can focus on if your net worth is going to be able to send this kid to college or not. That's
luckily that's not. I don't think. Luckily for now, that's not a worry.
Jose's like, dude, I bought this at like 5 cents. You think I'm worried about college right now? All right, this is what we got on Snowflake earnings.
Has those numbers. Julia.
John, Snowflake beating on the top and bottom line, reporting adjusted earnings per share of 35 cents versus the 27 cents estimated. Revenues of 1.14 billion ahead of estimates of 1.09 billion. Product revenue also coming in ahead of expectations. Non-GAAP operating margin 11% versus the street account estimate of 8.2%. The company also guiding to third quarter product revenue just ahead of expectations at 1.13 billion. Also saying they see non-GAAP third quarter operating margin of 9%, which is a full percentage point ahead of expectations. Also just want to mention this one quote in this quarterly report here. The company CEO saying thousands of customers are betting their business on Snowflake, and now more than 6,100 accounts are using Snowflake's AI every week.
Crowd up 12%, or actually Snowflake up 12%. Crowd is down. Cybersecurity continues to get hit. They beat on the top and the bottom, 93 cents versus 83 cents. EPS is down 11% year over year, but they beat by 12%. Revenue, they beat by 2%. Revenue is only up 21%. The reason I say only is because CrowdStrike is the second most expensive software stock outside of Palantir, and 21% growth is not the best amount of growth. That stock is down.
And they're buying a company.
They're buying, who are they buying?
They're buying a company called Onum, O-N-U-M, to supercharge Falcon Next Gen.
Do we have numbers on how much they're spending on that?
Let's see.
Oh, that's probably why it's down. They're making an acquisition. So they're following Palo Alto in terms of acquisitions, it seems like.
Yeah, Palo Alto, I mean, is going to spend, what was it, $20 billion to buy CyberArk. I don't know if CrowdStrike has that type of money.
Right. All right, Cyber. Go
For
ahead.
the new people that are in the chat, Nvidia's earnings are expected to drop at 420. So that's why we're getting these names right now, but we will be covering it.
They're going to drop at 420 because Jensen knows the Nvidia earnings will get the stock to be higher.
Does CNBC actually have a counter today?
What'd you say, Jose?
I thought I saw someone in the comments say that CNBC has a counter counting down to Nvidia's earnings. Was that actually a thing?
Yeah, they do. I'm seeing it right now.
That's wild.
Dude, it's a big day. It's
the biggest name in the market. They historically have the biggest weighting in the S&P, larger than any other company in history. This is big news.
Chris Patel in the chat says, is anyone hoping for a sell-off? Put in the chat. Is anyone Is anyone short? Does anyone want to see all four of us cry if this tanks 10%? Does anyone want to buy? I mean, I think all of us, if there's not a thesis breaker, would just be happy to buy that dip. But
yeah,
who's short? Who has puts? Who's scared of this?
If I didn't see the username and I just saw the message, you asked me who said that, I would have guessed Chris Patel. He loves being a contrarian. Eh? He just wants to poke and prod just a little bit.
CrowdStrike now down almost 8.5%. And this one, dude, like, again, this is an expensive stock, but and their niche is so important, but their growth is just not like what it was a year and a half ago. So it looks like that's why it's down. There's a couple shorts here in the chat. There's a couple people that have some puts, but I think the majority.
Get out of here.
I think the majority of us are long on this one.
Yeah.
All right.
How can you not be long? I mean, this is a tech revolution. Okay, let's get this through your heads. Amit, well, I don't know if you actually talk about the percentage of your portfolio, but you're a newer Nvidia shareholder. How quickly did you start acquiring shares and understand the thesis for this name?
Oh, one of the main reasons is because of you and Jose, right? Like pounding the table on this stuff. Let's just say my original goal was 1,000 shares. We're above 1,000 shares, and so and a lot of that, when my average is $122, so a lot of that was done. Yeah, a lot of that was done during DeepSeek. But I guess we got 5 minutes left. I mean, first of all, put in the chat if you want to put how many shares do you have, your average. If anyone wants to put that, I know there's one person in my chat named Louis who has like 90,000 shares at a $2 average. So I hope he's watching.
That is wild. Louis is amazing.
He was sending me screenshots of him texting his girlfriend, his dad, his mom back in 2016 of like, guys, it's Nvidia, you know, like he was that deep into it. But Tanner, I guess the question for you here right now is, if this really is this big of an AI revolution, do you think anyone that's not exposed to it is missing a key component of the stock market in general over the next decade?
Well, I don't think that you need Nvidia per se, but I think somewhere in the supply chain all the way down to the or all the way to the top, which would be the hyperscalers, I think that you need some exposure. No financial advice. Obviously, people have different timelines, different time horizons. There will be dips, corrections in the market. So, maybe for a dividend investor or something like this, but I think that there's never been a time in history where we've had an opportunity to buy such large names, but still call them, growth companies, right? So you get the protection of them having such high margin businesses, huge, existing businesses with large user bases, and yet they are going after new opportunities that are expanding margins and looking for new opportunities. So I think that there's never been a time like this in history. And, you know, I think everyone wants to look for that moment where we're in a .com bubble or you know, people's hopes get a little bit more extended than maybe what is happening in reality. But for this AI movement, I don't think that that's what's happening. People say that there's a, you know, the CapEx spend is too much, but every single time that someone buys an Nvidia chip, they're immediately set up and working right away. Like all the hyperscalers and neoclouds are saying they're at capacity and they can't buy enough. So, you know, I'm not seeing a slowdown here in the actual financials. So I'm continuing to be optimistic and bullish.
Jose,
Yeah,
same thing to you. I mean, do you think the next decade Nvidia needs to be in the portfolio?
I don't think it needs to be in the portfolio. I mean, I think Nvidia is going to continue to be a market beater over the long term, especially as we continue to innovate into. I mean, we don't have robots. I don't have a chef, a robot chef in my kitchen just yet. When I have that, that's when I might stop being bullish because it's like, what else could I want after this? But until I have that, I'm still long term bullish. Two chefs there. The other thing, I mean, the healthcare market, I mean, you can see that getting picked up by AI, autonomous forms of robotics, drone, whatever you want to see the autonomous space in the actual real world. It's possible thanks to the innovation of AI. Obviously, it's not all going to be a linear time frame. We're not going to get every single year some massive innovation, but it is going to be driven by research and development in all these products and all these places. So I think Nvidia will benefit from it. I think all of the other companies, though, will integrate AI, and that's how they can maybe investors that don't want the semiconductor play, the AI king play, the GOAT play, they might want to go with some other players that are just, I think, like Tanner was mentioning. I mean, your Google, your Microsoft, these typical blue chip names, they are already massive money makers. And they have this AI innovation and AI growth opportunity with them. So you get a little bit of both stories. And then in the software space and other places, I mean, Walmart eventually will have some form of AI market that will increase their earnings per share. Maybe not increase their revenue, but increase margins dramatically, that as a shareholder of Walmart, you will see the benefits of AI. Same with companies like Uber. When you have AI integrated into your platform, you might not see a revenue booster, but what you will see, and this is the main thesis, is you will see improvements on the margins themselves. So you can stay with the same revenue, but those earnings per share will increase thanks to the kind of efficiency gains you gain with these platforms.
You really say a lot not to talk about AMD in your answer, huh, Jose? I see you. For someone that's bullish on AMD, you never mention our dear Lisa Su.
Not today. She has her day. Not today.
All right, folks. So I know Jose, Neil, and Tanner will be looking for the numbers. I will be looking at the candlestick. So those three guys will try to get the numbers. Earnings should be out officially. We should see a movement very soon, either up or down. Maybe it'll be flat. The implied move is 6%. And in the next 30 seconds to a minute, we should see these numbers. Stock right here is moving green. We're up 1%. Let's see if that is a meaningful move or not.
Why don't you look at the minute candles here?
Where am I not on the minute? Let me see.
You're on 10 minutes.
Oh, you're right.
What a nose.
Yeah.
Okay, there we go. All right, 183. Oh, now it's down. Wow, it just went. Tanner, it's because of you. You made me switch to the freaking. Oh, I'm going back to 10 minutes. Oh, that also helps me zoom out. All right, we're down, folks. Oh, it's down.
Oh, no.
No.
How much down? I'm not even looking. I'm refreshing.
3%.
Oh, okay.
Can it stop that? Can it just go back up? Like, why is it?
It absolutely can.
Well, can you call Jensen? Is this like, all right, what are the numbers? Let's see.
Double beat.
Double beat. There we go. 46.7 billion beat by 1%. $1.05 versus $1.01. They beat by 4% on EPS.
$1.05 of EPS.
Tanner, raw reaction. What do you think?
Well, it's not the 48 billion or something crazy along these lines, but a double beat. I mean, we're gonna have to see bigger numbers than this. I want to see guidance. It's all gonna lie into guidance, but so far, I mean, this is perfectly fine. Double beats of not what Jensen had said they're going to see, but what Wall Street was expecting. So that is still positive overall, but it's going to lay into guidance here, which I do not have just yet.
Revenue is up 56% year over year. EPS up 54%. Neil, raw reaction on these numbers.
I mean, are we surprised of the double beat? No. I think we all knew double beat was coming. It's just that the market wants more. The market wants more. Stock was at close to all-time highs, if not all-time highs. Stock wants more. This is not enough, but maybe the call will be enough to push this stock back up. Because right now we have no information. Like we have revenue beat and EPS beat, but that's about it.
Yeah.
Once we have the presentation, we'll have more. And once Jensen talks and Colette talks, we'll have even more information. I truly hope they have the same mic as last quarter and not the mic they had like 2-3 quarters ago where you barely heard anything.
No, we're going to have the new mic. It's new mic season for sure.
I've got some more stats here before I get Jose. Also, guys, did we get a $60 billion buyback? I think that potentially has been initiated. Gross margin.
Guidance is 54 billion, by the way. Oh, sorry. Go ahead.
Guidance is 54?
Yeah.
Yeah, you're right. Jose, good or bad? I think that's good, right?
Yeah, that's good. Really good. These numbers, I want to say, weren't they're okay. I'm not too excited about them. It's nice. Double B. Guidance 54. Really happy. And yeah, $60 billion in buyback.
The presentations and CFO commentaries are up on the website, by the way.
Okay.
Yeah.
So 26 billion in net income, gross margin 72%, revenue guide at 54. Jose, the whisper number was like around 53, 54, right? So I mean,
yeah, guidance. I think guidance is definitely pretty strong. Now we have to I have to read, is this guidance including some China market? Is it not including China market? If it is not including China market, that's pretty wild too. But yeah, pretty, like I said, earnings, meh, nothing.
We have not assumed any H20 shipments to China in our outlook.
Oh, nice. Yeah, that was literally the next sentence. Then these are great revenue guidance, in my opinion. 54 without H20. Hopefully there's not caveat that it's the B20 they're included. I don't think they'll do that, but yeah, 54 without China market, that is really strong, in my opinion.
Wait, so they are not assuming in the 54 billion China at all?
Nope, not at all.
If you're on the CFO commentary, just scroll down a little bit. You'll see.
Yeah, a little bit more. Keep going.
Oh, there you go.
Yeah.
Wait, that's really bullish, bro. Because
Yeah,
if they get that, could be like a $57 billion quarter theoretically.
Yeah, I think it's about an $8 billion market for them last time. That's how much they took a hit. So it could be in theory, if they sell the whole thing, it could be a $60 billion revenue number if they kind of sell at those old numbers. But
which was the super bullish targets that I was hearing about, was if we ended up seeing 60 plus for next quarter, but if they're already excluding that, then there will be some commentary to suggest that maybe they are essentially hinting at that. I don't like Jose said, I wish they just said we have not assumed any China sales rather than H20 shipments to China, because it does allow people to speculate on if they're just playing around with the different products here, but I don't think that's a Jensen thing to do.
Well, that will be a question for sure on the call. Like what type of products, what licenses, etc. Like B30 is going to be a question in the call.
Let's get a little bit of coverage on that.
Yeah, and this is why you're seeing the stock drop. $54 billion. The company also saying that they are not. It does not include any sales to China, so they are not accounting for China sales for their Q3 guide. Keep in mind that the whisper number buy side was anticipating more of a $55 billion number, possibly. So just the fact that they're saying no China sales within that guidance could be why we're seeing a negative reaction. For the Q3 non-GAAP gross margins coming in at 73.5%, higher than the street anticipated. They're also announcing the board approved a $60 billion share repurchase or buyback program, no change to the dividend. So that's what we're seeing. And I will come back with CFO commentary in moments.
All right, Christina, thank you. Gil Luria, should we interpret that commentary around Q3 that China sales are not included in the Q3 guide as meaning that the actual number could be higher, or should we take that to mean that they don't expect to have China sales in Q3?
We're going to have to parse it one level deeper. We do know they've sold H20 chips, right? Those have been licensed, and they've been selling those into China. There may be a freeze now. They may have to pay a portion of that back to the government. So we know there's some China sales. If the company is saying without China, they probably mean, we'll find out, they probably mean no B30 sales. We don't know how much we need to degrade our chips yet in order for the US government to license those sales into China, because we haven't heard that they've gotten those licenses. We're not even sure they know what they need to do to those chips to sell. So it sounds like that's what we're hearing. If they do get licensed in the quarter and are able to sell within the quarter, there should be upside to that $54 billion guidance.
Yeah, this seems like a reaction on the double beat that's not as good as expected, but it's not like, I mean, correct me if I'm wrong, I don't see a thesis break, anything like that.
No, at the moment, no, obviously no thesis breaker from the numbers. I would say, I think the reason Nvidia isn't giving any China number is just the uncertainty behind it. I mean, I don't think it really has to do with them not getting any of the licenses or anything with the B30 or anything. I think now that I think about it, it's more a lot of thinking there. It's more of they just can't be honest with investors right now with the current the current action of both U.S. governments and Chinese governments. It would be almost irresponsible for them to give a number if next week or the week after they have to change it due to some regulations change. So I think they're playing it safe. They're saying, this is the numbers I know we can do. We can do $54 billion without the Chinese space. Now the Chinese space, we're getting some licenses. I think they even mentioned it in the commentary that they were able to sell a few. I think 100 I forget the numbers, but they were able to sell a few in this previous quarter after the licenses were improved. So why wouldn't they be able to sell it? I think the company is just being, in my opinion, respectable to its investors by saying, I'm not going to give you a picture that I can't tell you can't change within the next 2 to 3 months.
Yeah. The $60 billion authorization, I also think, is not something to, not go over either. I think that that's also an additional improvement. Not any change to their cash dividend, but $60 billion authorization without expiration.
And they bought back last quarter, how much? 100 billion? No, 9.7 billion. Oh, 10 billion. Okay, so 244 million of cash dividends, 9.7 billion of share repurchases. These headline numbers, Neil, anything you're seeing here that's you like or you don't like? Gross margins seem to be in the right spot, low 70s, operating income 28.4, EPS beat by a couple cents. I mean, anything you think that's a little weird there?
No, I mean, if you scroll down, you look at gaming. Gaming is up 49% year over year and 14 sequentially. That's pretty good. But then again, I mean, we've seen the numbers from AMD. They were also quite stellar for the gaming side of things. So I'm not surprised that Nvidia is also doing quite well quarter over quarter and year over year. They did also say with regards to the data center, that's down 1% because of that $4 billion hit from the H20. But yeah, no, it's a good quarter. It's a good quarter all in all. Blackwell is ramping up. So, I mean, Blackwell Ultra is coming up. So that's going to be exciting. We're probably going to hear a little bit more on that during the earnings call. But again, the stock's reaction, I don't know exactly what it is right now.
You're getting a bit of a recovery too. It was down 7. Yeah. Now it's down 2.
Exactly. I mean, we just heard all of the hyperscalers, all of the big tech companies talking about still increasing CapEx. And I know that CapEx will not continue to increase every single year by 50% or whatnot. But those are still huge amounts of money. Hundreds of billions of dollars that a lot of it for the GPU part of it will still flow to Nvidia. And then, of course, there's the software side of all of it, is the robotics, the autonomous vehicle side of all of it. Like physical AI is still at the start, at the beginning of the huge, let's call it, hockey stick J curve. I do wonder if they'll... Jose, do you remember the number that they said previously about robotics and autonomous? Like, was that $5 billion or something? $5 billion business?
I think in data center, they mentioned around it was a $5 billion annualized run rate on data centers. So what companies were using the data centers for. In forms of the actual automotive segment, I don't think they've really given us kind of a potential breakdown of that. I do want to say there were 2 numbers that really got me excited, and both were margins. I mean, margins on a non-GAAP basis were 72.7, right? A lot of bears were sprouting this fear that we're going to below that 70% margins. 61 last quarter was because of that one-time China expense that they had to do. But now we're up to 72.7 for quarter 3. They guided 73.5. So we're getting back to those mid levels, and I think the commentary again mentioned that they continue to expect to exit the year with non-GAAP gross margins in the mid 70%. So gross margin still, that's a nice 70%, getting closer to that mid 70%. That's something that's pretty exciting. It showcases that, look, we don't have too much competition, I guess, at the moment, where we don't have to worry about pricing. We also have that stickiness with the software that is able to kind of create some form of strength on upselling towards you. So margins are really strong right now.
Jensen says, real quick, Blackwell is the AI platform the world has been waiting for, delivering an exceptional generational leap. Production of Blackwell Ultra is ramping at full speed and demand is extraordinary. Nvidia NVLink rack scale computing is revolutionary, arriving just in time as reasoning AI models drive orders of magnitude increases in training and inference performance. The AI race is on and Blackwell is the platform at its center. It looks like during the call, Jensen will continue to explain that Blackwell is the epicenter of where AI is taking place. Tanner, go ahead.
No, I was just going to sort of repeat what Jose said. They're on track to hit their targets of mid 70s. Let's call it 75% gross margins by end of year. So for their end of year, so that did look great. And if the stock stays or even potentially drops slightly after reporting these great results, look at this company from a valuation perspective. This makes them just much cheaper. So I don't actually think it will stick as a sell-off over time, especially after we get the call. I think that will, alleviate some pressures as Jensen clears up some questions for investors. And I don't think that the stock, movement here is over. I think that we could still see some severe candles before we're done with the earnings call.
Yeah, I'm going to expect after these numbers, we're going to see, just because of the gross margins themselves, a lot of analysts are going to go back and kind of increase, just even if they keep revenue the same, they're going to increase their earnings per share guidance for the upcoming quarters. And we might see some price target upgrades tomorrow, just purely based on margin expansion. Because I do believe a lot of analysts were still expecting maybe lower 70% margins in some of their valuations. So that is kind of going back to what Jensen and the team have been saying, that they're going to go back to mid 70s. I think a lot of them are going to go back and we'll see some price target hikes tomorrow.
Yeah, I don't see this as a quarter to sell off the stock. That's not, I mean, the reaction feels typical given it's, we're heading into September and it was a good beat, but it was not like some crazy phenomenal beat. And also the stock is up more than 100% from the lows, but it doesn't seem like there's anything scary from this quarter.
No, this is not a bad quarter at all. If you're a long-term Nvidia shareholder, you're happy with these numbers, and we continue to see the rollout for the GB300s and see what the demand for that is. And according to Jensen Huang, that's still very, very strong.
Let's get a little bit more coverage on this.
It did beat in several business categories, including gaming, pro visuals, as well as auto. But it's the data center segment that really just failed to hit the mark. It's the second straight quarter in a row that data center revenue came in a little bit less than what analysts were expecting. The CFO did publish her usual commentary. And in that report, she said that they recognize Blackwell revenue across all categories and customers, but it's primarily led by cloud service providers. They contributed roughly 50% of that data center revenue. They also pointed out too that their inventory was at $15 billion, a little bit higher, to support the ramp of Blackwell Ultra, which hopefully we should hear more about that ramp on the call, which could help also turn this stock around too. And then lastly, we said it earlier, but just to make sure everybody heard, they have not assumed any H20 chips to China in their outlook. So very similar to AMD, they did not include China in their outlook.
All right. Yeah, Christina, thanks. The stock's off the lows, down about 2.5.
Does anyone think this is a quarter that, if they don't get China revenues, is the best it's going to get into the future? Like, this is the best type of growth rates they could put up if they don't get China. If Trump and China have such a bad relationship and China uses Huawei and Nvidia is just not able to capture that.
I think in forms of growth rate percentage-wise, I think yes, at least for now, until we see some revolutionary change in the AI space. But in forms of growth, I still believe it's still going to be strong double digits. What was it? I forget. It was 50 something today. Maybe next quarter it drops down to 40s and stuff like that. But it's still going to be that crazy growth stories that for a $1 trillion company, it's wild. And I mean, we've heard from all these big players. They've increased their capital expenditure dramatically throughout this year, and it's going to continue to go up throughout the quarters. So there's definitely plenty of stories and plenty of AI startups that still have plenty of money to buy AI chips here.
Yeah, on a quarter-over-quarter basis, we're actually expected to accelerate from Q1, or sorry, from Q2 to Q3 than what we did previously. Obviously, on a year-over-year basis, it's very hard for a company of any size, let alone the biggest company in the world, to put up 50+% growths forever. But I think the use cases and the demand for artificial intelligence, I still think we're way too early to know what that looks like. So do I think that Nvidia is done in terms of their growing? Not one bit.
Neil, your thoughts on if China revenue doesn't come back?
I mean, if it doesn't come back, Jensen said, what was it, Jose? 50 billion? It's a $50 billion.
It's
market.
$1 billion. Yeah, really the TAM for them.
Yeah, it's a big market,
Annually.
but then again, you suddenly have Saudi Arabia, UAE coming in with their own like huge projects. There are some Stargate projects there as well, so it could balance things out. Of course, it will probably take a bit more time, but I just don't see how the China market does not come back. I mean, it comes back. They now need new licenses for their upcoming products. And I mean, in the meantime, we're also waiting for Blackwell Ultra. So that's happening. That's ramping up late in the quarter. And I do think once we go into 26, 27, things are getting quite interesting with the upcoming versions, which become more complex and more expensive. So we'll see what happens there. But yeah, they're building AI factories. So it's still a long way to go. Because when you think about it, like 2 years ago, 2.5 years ago, 2.5 years ago, data center was basically the size of the gaming business for Nvidia, or maybe even less than that. So we're only 2.5 years in. Fast forward 2.5 years later, the world will probably look a bit different. You might have robots everywhere. You might have autonomous. You probably have autonomous vehicles driving in various countries around the world. Maybe Amit will have a figure robot on his stream. Who knows? We'll see. But yeah, we're still early on. Stock was, in my opinion, also priced to perfection going into this report. But then again, there still is the earnings call, so a lot can change in the next hour and a half.
And I mean, as long as the AI innovation continues, I mean, with the Vera Rubin Ultra, you're going to have NVL 576 be able to connect. I think that was the number. I might be a little bit off with the actual number, but being able to connect 576 GPUs together in this current AI era is crucial. It's crucial for the cost, the TCO, and revenue generation. So when something like that comes out, hyperscalers are going to open up their wallets again and buy plenty and plenty of those. So the great thing is you don't even need these sovereign AI for the growth, especially some of these sovereign AIs in like Middle East or around that area. Just the big hyperscalers are going to continue. As long as this AI market continues to grow, they're going to keep spending. I mean, you have the big four are each going to be spending $100 billion in capital expenditure next year. From those four players, a good portion is going to go to Nvidia, obviously to some other players, but Nvidia is going to continue to dominate. So growth is still here with and or without some sovereign nations.
And it seems like we're picking up new sovereign nations, right? Like now we have to factor in what percentage of the overall revenue goes to the Saudis or potentially the UK or other areas like this. So there will be other massive buyers as well. Which is also, quite interesting to the, not just on a quarterly basis, but the multi-year perspective on the company as well.
Yeah, I mean, this really does feel like it was at all-time highs and the print was good, just not good enough. And the street's not giving them enough credit for the lack of China revenue and the guidance for Q3, but they don't need to give them credit because the stock's at all-time highs. It's not like a $120 stock anymore. So I think this is fair. 2-3% down. We'll see if it gets worse when Jensen talks or better. But if this stays flat going into the end of September, and then eventually we have to wait for rate cuts, kind of Santa Claus rally, maybe that's when it picks up. The point you made about robotics is also very true. I mean, we saw this company today, RR, that was up like 20% based on Nvidia taking a stake in them and some of their robots already being inside of Nvidia's operations. I mean, that stuff's going to scale to the tunes of billions of robots, right? Like that's happening. It's not happening tomorrow, but it is happening. And as a result, selling Nvidia at 175, if you got in at 100 because of a quarter that just might not have had the print that got the street really excited about, probably not the best idea.
Wait. The Rich Tech Robotics, Nvidia took a stake in the company?
That's what I heard.
No, they just have,
I thought they just
have a robot in
tweeted
there.
something.
Yeah.
Oh, they
just
tweeted about
something.
them? Oh, well, my
Yeah,
chat said they took a 3% stake in these guys.
Huh.
Oh, I didn't see that part.
Well,
I don't know about that part. Maybe they did. Maybe they did. I didn't see that one though.
If they didn't, then the tweet was good enough to get them up 20%. A tweet pumped them 20%. Goodness. All right. Well,
I mean, and Navitas did the same thing with their blog post, and that thing skyrocketed as well. But yeah, if they took a stake, okay, that's something else. But no, I thought it was just that tweet that they were one of the first to adopt Nvidia Jetson or whatever that was. Like, wow, okay, great.
Well, it is a small cap, so maybe a tweet could have pumped them from like 200 million to 400 million.
Yeah, I think the market right now also can look at individual quarterly prints, which, by the way, let's not act like this was a miss. Okay, it was still a double beat, although slight, and then guidance was, still more than expected. Well, factoring in the fact that they're not adding in China sales, but whenever you look at it that way, the long-term perspective here of having more AI through all of those businesses, robots, autonomous driving, every single factor. I wonder which analyst really does believe that over the next, multi-year time period that Nvidia is either not going to play at the same market share in terms of the chips that end up getting delivered, or that the growth in that total addressable market is, not up to what the rest of the market is seeing. I don't see very many bear cases on, robotics or full self-driving and the data centers that are needed for those fleets. So I personally am not going to look at this from a quarter-to-quarter perspective, but mainly on a multi-year basis, which I think places Nvidia at a much higher price than where it is today.
Yeah, Tanner has I think the great mentality there. I mean, not Jensen, but I forget her name, the kind of vice president of health. She does a healthcare presentation at least once a year, and Nvidia sees just the healthcare market as a multi-$100 billion opportunity for them. Just because of the training, if you're kind of need to figure out some new type of medicine, AI agents for a lot of the hospitality, and just everything in between, the robotics within there, just the healthcare market, which hasn't even started yet, in the long term is going to be a massive tailwind for that space. And that's a space that has a lot of money. So yeah, quarter it was all right. I mean, obviously great to have beat earnings, and that's already that analysts are already expecting a lot from Nvidia. So to be able to beat on that and then just tell us that, look, we're still with 72% margins, developing in the software side, developing in the hardware side, developing in the data center and the kind of overall server rack system. I just can't see why long term, it's not always going to be a straight line. And I think Tanner would probably agree with that. It's not going to be always a straight line of growth here. There's going to be some hiccups. Those hiccups will create great buying opportunities for investors in the long term. But that long-term mentality of AI being that revolutionary product, I think or revolutionary tech is definitely there.
Yeah, that is not slowing down anytime soon. We got some headlines here on Google investing $9 billion in Virginia through 2026 to expand cloud and AI infrastructure. Meta is putting up $50 billion in Louisiana to build a data center. I mean, the growth seems like it is not slowing down. But they did miss data center estimates by 0.46%. So as a result, stock is down.
Yeah, down 3.
Down 3. Here's a little bit more coverage on the quarter.
Down, I think, around 5 or more at some point. Pat Moorhead, anything in this report so far that you see that shifts your opinion on Nvidia's position in the market at all, either way?
What we know so far, the short answer is no. And I do appreciate the comments that Gil had about China. This is day to day. And the two camps are clearly DOD and 3-letter acronym agencies versus commerce and Trump. And I think that NVIDIA, if the guide is clearly about China, which we'll hear more about the call, they're just being conservative. Nobody could put a number out there that includes China right now. If they did, they would be making it up. And I think NVIDIA is just being conservative. Now, we can hear on the call that, it's potential supply chain challenges. And, this Blackwell is extremely more challenging than its predecessors, right? And you have to look at CoWoS, you have to look at packaging, you have to look at NVLink and Spectrum and all of the different cooling implementations and power implementations that go in. Gail also talked about the data centers being ready. I hope to get data center digestion details out of this. But until now, let's assume it's China, and I think they made the right move.
All right, the stock is now off a little less than 1.5%. Brenda Vingello, China aside, we just talked a lot about China. What do you as a shareholder want to hear about on the call the most, color-wise?
Right. What I really want to hear about is ongoing future opportunities for growth beyond where we're at, just to again, kind of substantiate the view that we aren't at peak yet. There are still a lot of opportunities. We have, there's some concern about customer concentration at NVIDIA, but to the extent that they are able to continue to grow their business internationally and with sovereign entities, that's another area for diversification away from US and away from China. So I think hearing more about that opportunity is also important. I don't think we'll get a whole lot of information about very specific details, but very big picture opportunities. I think that will be helpful for the longer term story.
Do you think there is a big picture opportunity Jensen's really going to harp on? Because I think the obvious one is robotics. Jose, any thoughts on that one?
Yeah, I think robotics is the next step, or what he calls physical AI. I mean, I think we're still in kind of the AI agent phase. That still hasn't really started off. So AI agents is what he considers now. The next is kind of physical AI, which is kind of the robotics market. So those are the two he should start to really talk about. If he starts to bring a third, that would be really exciting, because that's where it kind of talks about that research and development. We haven't heard a third just yet. A third would be awesome if we start hearing about that soon.
Neil, same question to you. Any specific core things you think Jensen's going to harp on? And by the way, guys, I'm putting Tanner, Jose's, and Neil's YouTube channel in the chat. So if you're not subscribed to them from my channel, you can subscribe to them. But Neil, any major vertical like self-driving robotics you think Jensen will harp on?
Yeah, I think both of them. I think autonomous vehicles and robotics. I mean, he's been talking a lot more about it, especially this year. Since the start of the year, he's been talking a lot more about physical AI, in my opinion. And I think he'll continue. But again, I think the direction of the questions will be directed towards the China side of the business. I don't know if we're going to get that many answers or clear-cut answers, but I do think that that's the way the call will go.
Tanner, same to you.
Yeah, I mean, I think it's going to follow the same S-curves that NVIDIA has been talking about. So they're going to talk about, obviously, generative AI, then agentic AI, then physical AI. And although there are some use cases for agentic AI right now, it's still so nascent, it's incredible. And the token needs for agentic purposes in artificial intelligence are so much more than what we're seeing for generative AI. And the actual, revenue potential and real earnings from an agentic artificial intelligence purposes is also much more important. So I think it lends itself to more commercial use. And then after that, obviously, the one that's very exciting and probably has the largest TAM is physical AI. And so there's going to be a lot of talk from Jensen, and they ended up just pushing out their Thor product, which that obviously is going to be very exciting as well. Did you guys see, Jose, Neil, that Meta was one of the early purchasers of that chip? What did you make of that?
I mean, Ten, I don't know if Meta has their kind of AI engineering blogs, and they've talked about robotics. They actually have a lot of open source robotic stuff. I just think Meta wants to
Research
touch every
purposes?
research. Yeah, right now everything in AI. They know AI is going to be a big thing in the physical world. Obviously, right now their main push is augmented reality and the glasses like that. With the AI glasses style, or Orion, I think it's the glasses they want to build, but they have a lot of engineers working with robotic stuff. I think it's more for research purpose opposed to an actual humanoid friend that they might be building.
Got you.
Yeah, I mean, next month is, I think next month they're already going to announce the next gen smart glasses with a small screen.
Yeah.
I don't, it's not the Orion one, it's not full on AR glasses, but it's already a step up from the Ray-Ban and Oakley glasses that we have today, which is pretty exciting.
For me and Jose, it's an easy transition, but for you, Neil, I mean, I wonder if you want a screen or glasses on your face in order to see your texts come in from your wife or something.
I don't know what wife you're talking about, but I don't know. Maybe you know something I don't. But no. But I do have glasses for if I drive late at night or if I need it.
Neil, you do have the Meta glasses, though, right? I think you do.
Yes,
the
sir.
current ones.
Yes, sir.
Yeah.
Yeah. Pretty cool.
CrowdStrike taking a bit of a hit, down about 7.7. Nvidia's down 3. Snowflake's still holding 11. Mongo's holding its pump today. Palantir down about 1%. Bitmine down 0.5% after hours. Opendoor is up 2.4. Tesla's down 1%. Serve Robotics is down 1. SoFi's down 0.5%. Meta's flat. I mean, you got the S&P obviously down, as Nvidia is a big part of it. Yeah, we're gonna have to see what Jensen says, and maybe he turns this around, but maybe he doesn't. And if he doesn't, and the S&P falls back to like 635, that's still up 2.5% for the month. A month where you don't get a 2% month in August. That tends not to happen. We're at 4%, 4.2% right now. So if we give back half of that, I don't think it's the worst thing in the world.
I mean, a CoreWeave isn't moving that much, and Iron isn't moving that much either. AMD's down a tiny bit, but it's not like Nvidia just brought down the whole market right now, from what I'm seeing.
Not at all.
Barely anything's moving for now.
Yeah, not at all.
Nvidia's not as cool as it was before, I guess.
Yeah, it's done. It's over. That's the thumbnail. Future thumbnails. It's over.
Yeah, they still play an 8% role or whatever it is in the S&P 500. So the market will feel whatever they end up opening it at tomorrow. So that'll be interesting. But for me, as a long-term holder, that's not going to make any sort of difference.
Yeah, agreed. Robinhood as well. That one is down 0.1% after hours. Again, Robinhood was at $30. Now it's at $100. So Nvidia going down definitely does theoretically hurt Robinhood just based on the level of assets on its platform, transaction volumes, all that stuff. But the volatility of it going down is still good for Robinhood. So given Robinhood's a directional bet on the bull market, if you get a little bit of weakness in the bull market on a bad Nvidia earnings, that could hurt Robinhood as well, which is why that stock is down.
On a bad Nvidia earnings?
Well, I mean, not a bad Nvidia earnings, but rather the jitterness of Nvidia earnings. I mean, I think it's not just Hood, all of high beta today, took a hit. And I feel like it's because the market was just scared that something like this would happen, which again is not a horrible quarter by any means. It's just not a quarter that 49 billion beat by 3 billion like it was a year and a half ago. Like those quarters are just probably not happening anymore, especially because the analysts keep getting more bullish going into the quarter. So it's like the expectations were 45.3, then 45.8, then it was 46.1. Nvidia comes out with 46.3. It's like, all right, well, that's not that big of a beat anymore, given the expectations.
Yeah, we also didn't talk about, or I don't think we talked about free cash flow margin was a little bit surprising this quarter as well.
Good or bad?
Looks like 28.8%, which is...
Oh, wow. Nice. The market was expecting around 24. I didn't even look at that. Yeah.
Yeah.
Tanner, the 60 billion buyback, you think that's bullish, or you think they could use that money somewhere else, or how do you think of that one?
No, I think it's bullish. We're a $4+ trillion business. So as the numbers get bigger, 60 billion makes a less and less of a large impact. You would think it could buy, you know, like some of the other companies that I cover are less than half of 60 billion. Like they could buy SoFi twice over or something like this. Like 60 billion is a lot of money. But on $4.4 billion, $4.3 billion of market cap, not the biggest deal, but it is still, you know, something that they have to do. And they're going to keep up their dividend and their buybacks because it fits into the objectives of different funds that also allow them to get stake in Nvidia. I remember having a sit down with a Fidelity portfolio manager. This was a long time ago. And they said that for their value fund, Nvidia was their top name. That was their top pick. It was a value fund, not a growth fund, a value fund. So they were very impressed by the buybacks and the dividends, but really that's just there to fit the objective of buying a good name that they also wanted exposure to.
Yeah. We have about 2 minutes until the call begins, and then we're going to see what we end up getting from Jensen. Just fair warning here. It's going to be boring for the first, like, probably 30 minutes. You'll get a little bit of Jensen, and then you're going to get Colette, the CFO, say a lot of numbers that we already talked about for the past hour, and then you will get Q&A. So just be ready to be bored.
I think you're downplaying it too much. I mean, get
Tanner,
into it, ladies and gentlemen.
It's going to be boring, bro. Like,
it's going to be a rave. We're gonna have
Everybody's going to be like, Colette, stop talking, please. You're dropping the stock. And then Jensen's going to be like, Jensen, come on, say something. The chat's going to hate it. I like it, but chat's going to hate it.
We got a quote from Nvidia. The U.S. government has not officially declared regulation codifying the 15% revenue split.
Yeah, I think it's because of the magnets deal.
Oh, you're right. Yeah.
Damn magnets.
They want those magnets.
Yep.
Yeah, that's likely going to be something that determines where this 15% revenue split comes from. Okay, so I'm just waiting to see when the call officially goes live, and then
Are any of you bullish on Apple, Amit and Tanner? Because I know Jose's answer already.
Bullish on Apple?
Mm-hmm.
Does that answer your question? No, I'm an Android guy through and through. Yeah.
Thank you.
Just bought a new computer. I got a 5080 in it. Okay, so I'm supporting Jensen, supporting Nvidia, but no, I don't touch any Apple products.
Amit, you're big on Apple. You just bought a new iPhone, so you're helping Tim Cook a bit with his 30 times PE growing 1%.
Yeah, look, I wouldn't buy the stock, but I will never use an Android. I'm sorry. And Tanner thinks that I would if they have some better AI assistant. The answer to that is no. So I will be with Apple.
You don't like the Pixel 10 Magic Qs product that came out? I think it's pretty interesting.
I'm buying it.
There you go.
I'm
a Google shareholder. I have to help Sundar.
Yeah.
All right, let's get started. Call is officially starting. Let me just pull this up. And all right, here we go.
After the speaker's remarks, there will be a question and answer session. And if you would like to ask a question during this time, simply press star followed by the number 1 on your telephone keypad. If you would like to withdraw your question, press star 1 again. Thank you.
Is this max volume?
Sophia Hari, you may begin your conference.
Thank you. Good afternoon, everyone, and welcome to NVIDIA's conference call for the second quarter of fiscal 2026. With me today from NVIDIA are Jensen Huang, President and Chief Executive Officer, and Colette Kress, Executive Vice President and Chief Financial Officer. I'd like to remind you that our call is being webcast live on NVIDIA's Investor Relations website. The webcast will be available for replay until the conference call to discuss our financial results for the third quarter of fiscal 2026. The content of today's call is NVIDIA's property. It can't be reproduced or transcribed without our prior written consent. During this call, we may make forward-looking statements based on current expectations. These are subject to a number of significant risks and uncertainties, and our actual results
We
may
got approval before doing this, right, Amit?
For a discussion of factors that
Written
could
approval,
affect our
okay.
future financial results and business, please refer to the disclosure in today's earnings release, our most recent Forms 10-K and 10-Q, and the reports that we may file on Form 8-K with the Securities and Exchange Commission. All our statements are made as of today, August 27th, 2025, based on information currently available to us. Except as required by law, we assume no obligation to update any such statements. During this call, we will discuss non-GAAP financial measures. You can find a reconciliation of these non-GAAP financial measures to GAAP financial measures in our CFO commentary, which is posted on our website. With that, let me turn the call over to Colette.
Thank you, Toshio. We delivered another record quarter while navigating what continues to be a dynamic external environment. Total revenue was $46.7 billion, exceeded our outlook as we grew sequentially across all market platforms. Data center revenue grew 56% year over year. Data center revenue also grew sequentially despite the $4 billion decline in H20 revenue. Nvidia's Blackwell platform reached record levels, growing sequentially by 17%. We began production shipments of GB300 in Q2. Our full stack AI solutions for cloud service providers, neoclouds, enterprises, and sovereigns are all contributing to our growth. We are at the beginning of an industrial revolution that will transform every industry. We see $3 to $4 trillion in AI infrastructure spend by the end of the decade. The scale and scope of these buildouts present significant long-term growth opportunities for NVIDIA. The GB200 NVL system is seeing widespread adoption with deployments at CSPs and consumer internet companies. Lighthouse model builders, including OpenAI, Meta, and Mistral, are using the GB200 NVL72 at data center scale for both training next generation models and serving inference models in production. The new Blackwell Ultra platform has also had a strong quarter, generating tens of billions in revenue. The transition to the GB300 has been seamless for major cloud service providers due to its shared architecture, software, and physical footprint with the GB200, enabling them to build and deploy GB300 racks with ease. The transition to the new GB300 rack-based architecture has been seamless. Factory builds in late July and early August were successfully converted to support the GB300 ramp, and today, full production is underway. The current run rate is back at full speed, producing approximately 1,000 racks per week. This output is expected to accelerate even further throughout the third quarter as additional capacity comes online. We expect widespread market availability in the second half of the year as CoreWeave prepares to bring their GB300 instance to market, as they are already seeing 10x more inference performance on reasoning models compared to H100. Compared to the previous Hopper generation, GB300 NVL72 AI factories promise a 10x improvement in token per watt energy efficiency, which translates to revenues as data centers are power limited. The chips of the Rubin platform are in fab. The Vera CPU, Rubin GPU, CX9 SuperNIC, NVLink 144 scale up switch, Spectrum X scale out and scale across switch, and the silicon photonics processor. Rubin remains on schedule for volume production next year. Rubin will be our third generation NVLink rack scale AI supercomputer with a mature and full scale supply chain. This keeps us on track with our pace of an annual product cadence and continuous innovation across compute, networking, systems, and software. In late July, the US government began reviewing licenses for sales of H20 to China customers. While a select number of our China-based customers have received licenses over the past few weeks, we have not shipped any H20 based on those licenses. USG officials have expressed an expectation that the USG will receive 15% of the revenue generated from licensed H20 sales, but to date, the USG has not published a regulation codifying such requirement. We have not included H20 in our Q3 outlook as we continue to work through geopolitical issues. If geopolitical issues reside, we should ship $2 to $5 billion in H20 revenue in Q3. And if we had more orders, we can build more. We continue to advocate for the US government to approve Blackwell for China. Our products are designed and sold for beneficial commercial use, and every licensed sale we make will benefit the US economy, the US leadership. In highly competitive markets, we want to win the support of every developer. America's AI technology stack can be the world standard if we race and compete globally. Notably in the quarter was an increase in Hopper 100 and H200 shipments. We also sold approximately 650 million of H20 in Q2 to an unrestricted customer outside of China. The sequential increase in Hopper demand indicates the breadth of data center workloads that run on accelerated computing and the power of CUDA libraries and full stack optimizations, which continuously enhance the performance and economic value of our platform. As we continue to deliver both Hopper and Blackwell GPUs, we are focusing on meeting the soaring global demand. This growth is fueled by capital expenditures from the cloud to enterprises, which are on track to invest $600 billion in data center infrastructure and compute this calendar year alone, nearly doubling in 2 years. We expect annual AI infrastructure investments to continue growing, driven by the several factors: reasoning agentic AI requiring orders of magnitude more training and inference compute, global buildouts for sovereign AI, enterprise AI adoption, and the arrival of physical AI and robotics. Blackwell has set the benchmark as it is the new standard for AI inference performance. The market for AI inference is expanding rapidly, with reasoning and agentic AI gaining traction across industries. Blackwell's rack-scale NVLink and CUDA full-stack architecture addresses this by redefining the economics of inference. New NV FP4 4-bit precision and NVLink 72 on the GB300 platform delivers a 50x increase in energy efficiency per token compared to Hopper, enabling companies to monetize their compute at unprecedented scale. For instance, a $3 million investment in GB200 infrastructure can generate $30 million in token revenue, a 10x return. NVIDIA's software innovation, combined with the strength of our developer ecosystem, has already improved Blackwell's performance by more than 2x since its launch. Advances in CUDA, TensorRT LLM, and Dynamo are unlocking maximum efficiency. CUDA library contributions from the open source community, along with NVIDIA's open libraries and frameworks, are now integrated into millions of workflows. This powerful flywheel of collaborative innovation between NVIDIA and global community contribution strengthens NVIDIA's performance leadership. NVIDIA is a top contributor to OpenAI models, data, and software. Blackwell has introduced a groundbreaking numerical approach to large language model pre-training. Using NV FP4, computations on the GB300 can now achieve 7x faster training than the H100, which uses FP8. This innovation delivers the accuracy of 16-bit precision with the speed and efficiency of 4-bit, setting a new standard for AI factor efficiency and scalability. The AI industry is quickly adopting this revolutionary technology, with major players such as AWS, Google Cloud, Microsoft Azure, and OpenAI, as well as Cohere, Mistral, Kimi AI, Perplexity, Reflection, and Runway, already embracing it. NVIDIA's performance leadership was further validated in the latest MLPerf training benchmarks, where the GB200 delivered a clean sweep. Be on the lookout for the upcoming MLPerf inference results in September, which will include benchmarks based on the Blackwell Ultra. NVIDIA RTX Pro servers are in full production for the world's systems makers. These are air-cooled, PCIe-based systems integrated seamlessly into standard IT environments and run traditional enterprise IT applications, as well as the most advanced agentic and physical AI applications. Nearly 90 companies, including many global leaders, are already adopting RTX Pro servers. Hitachi uses them for real-time simulation and digital twins, Lilly for drug discovery, Hyundai for factory design and AV validation, and Disney for immersive storytelling. As enterprises modernize data centers, RTX Pro servers are poised to become a multi-billion-dollar product line. Sovereign AI is one on the rise as the nation's ability to develop its own AI using domestic infrastructure, data, and talent presents a significant opportunity for NVIDIA. NVIDIA is at the forefront of landmark initiatives across the UK and Europe. The European Union plans to invest 20 billion euros to establish 20 AI factories across France, Germany, Italy, and Spain, including 5 gigafactories to increase its AI compute infrastructure by tenfold. In the UK, the Umbard AI supercomputer powered by NVIDIA was unveiled at the country's most powerful AI system, delivering 21 exaflops of AI performance to accelerate breakthroughs in fields of drug discovery and climate modeling. We are on track to achieve over 20 billion in sovereign AI revenue this year, more than double than that of last year. Networking delivered record revenue of 7.3 billion, and escalating demands of AI compute clusters necessitate high efficiency and low latency networking. This represents a 46% sequential and 98% year-on-year increase, with strong demand across Spectrum-X Ethernet, InfiniBand, and NVLink. Our Spectrum-X enhanced Ethernet solutions provide the highest throughput and lowest latency network for Ethernet AI workloads. Spectrum-X Ethernet delivered double-digit sequential and year-over-year growth, with annualized revenue exceeding 10 billion. At Hot Chips, we introduced Spectrum XGS Ethernet, a technology designed to unify disparate data centers into gigascale AI superfactories. CoreWeave is an initial adopter of the solution, which is projected to double GPU to GPU communication speed. InfiniBand revenue nearly doubled sequentially, fueled by the adoption of XDR technology, which provides double the bandwidth improvement over its predecessor, especially valuable for the model builders. The world's fastest switch, NVLink, with 14x the bandwidth of PCIe Gen 5, delivered strong growth as customers deployed Grace Blackwell NVLink rack scale systems. The positive reception to NVLink Fusion, which allows semi-custom AI infrastructure, has been widespread. Japan's upcoming Fugaku Next will integrate Fujitsu's CPUs with our architecture via NVLink Fusion. It will run a range of workloads, including AI, supercomputing, and quantum computing. Fugaku Next joins a rapidly expanding list of leading quantum supercomputing and research centers running on NVIDIA's CUDA-Q quantum platform, including ULIC, AIST, NNF, and NERSC, supported by over 300 ecosystem partners, including AWS, Google Quantum AI, Quantinium, QEra, and PsiQuantum. Jensen Thor, our new robotics computing platform, is now available. Thor delivers an order of magnitude greater AI performance and energy efficiency than Nvidia AGX Orin. It runs the latest generative and reasoning AI models at the edge in real time, enabling state-of-the-art robotics. Adoption of Nvidia's robotics full-stack platform is growing at rapid rate. Over 2 million developers and 1,000 plus hardware, software applications, and sensor partners taking our platform to market. Leading enterprises across industries have adopted Thor, including Agility Robotics, Amazon Robotics, Boston Dynamics, Caterpillar, Figure, Hexagon, Medtronic, and Meta. Robotic applications require exponentially more compute on the device and in infrastructure, representing a significant long-term demand driver for our data center platform. NVIDIA Omniverse with Cosmos is our data center physical AI digital twin platform built for development of robot and robotic systems. This quarter, we announced a major expansion of our partnership with Siemens to enable AI automatic factories. Leading European robotics companies, including Agile Robots, Neuro Robotics, and Universal Robots, are building their latest innovations with the Omniverse platform. Transitioning to a quick summary of our revenue by geography. China declined on a sequential basis to low single digits percentage of data center revenue. Note, our Q3 outlook does not include H20 shipments to China customers. Singapore revenue represented 22% of second quarter's billed revenue as customers have centralized their invoicing in Singapore. Over 99% of data center compute revenue billed to Singapore was for US-based customers. Our gaming revenue was a record $4.3 billion, a 14% sequential increase and a 49% jump year on year. This was driven by the ramp of Blackwell GeForce GPUs as strong sales continued as we increased supply availability. This quarter, we shipped GeForce RTX 5060 desktop GPU. It brings double the performance along with advanced ray tracing, neural rendering, and AI-powered DLSS4 gameplay to millions of gamers worldwide. Blackwell is coming to GeForce Now in September. This is GeForce Now's most significant upgrade, offering RTX 5080 class performance, minimal latency, and 5K resolution at 120 frames per second. We are also doubling the GeForce Now catalog to over 4,500 titles, the largest library of any cloud gaming service. For AI enthusiasts, on-device AI performs the best RTX GPUs. We partnered with OpenAI to optimize their open source GPT models for high quality, fast, and efficient inference on millions of RTX-enabled Windows devices. With the RTX platform stack, Windows developers can create AI applications designed to run on the world's largest AI PC user base. Professional visualization revenue reached $601 million, a 32% year-on-year increase. Growth was driven by an adoption of the high-end RTX workstation GPUs and AI-powered workload like design, simulation, and prototyping. Key customers are leveraging our solutions to accelerate their operations. Activision Blizzard uses RTX workstations to enhance creative workflows, while robotics innovator Figure AI powers its humanoid robots with RTX embedded GPUs. Automotive revenue, which includes only in-car compute revenue, was $586 million, up 69% year-on-year, primarily driven by self-driving solutions. We have begun shipments of NVIDIA Thor SoC, the successor to Orin. Thor's arrival coincides with the industry's accelerating shift to vision language model architecture, generative AI, and higher levels of autonomy. Thor is the most successful robotics and AV computer we've ever created. Thor Willpower. Our full stack drive AV software platform is now in production, opening up billions to new revenue opportunities for NVIDIA while improving vehicle safety and autonomy. Now moving to the rest of our P&L. GAAP gross margin was 72.4% and non-GAAP gross margin was 72.7%. These figures include a $180 million or 40 basis point benefit from releasing previously reserved H20 inventory. Excluding this benefit, non-GAAP gross margins would have been 72.3%, still exceeding our outlook. GAAP operating expenses rose 8% and 6% on a non-GAAP basis sequentially. This increase was driven by higher compute and infrastructure costs, as well as higher compensation and benefit costs. To support the ramp of Blackwell and Blackwell Ultra, inventory increased sequentially from $11 billion to $15 billion in Q2. While we prioritize funding our growth and strategic initiatives, in Q2, we returned $10 billion to shareholders through share repurchases and cash dividends. Our board of directors recently approved a $60 billion share repurchase authorization to add to our remaining $14.7 billion of authorization at the end of Q2. Okay, let me turn it to the outlook for the third quarter. Total revenue is expected to be $54 billion, plus or minus 2%. This represents over $7 billion in sequential growth. Again, we do not assume any H20 shipments to China customers in our outlook. GAAP and non-GAAP gross margins are expected to be 73.3%, 73.5% respectively, plus or minus 50 basis points. We continue to expect to exit the year with non-GAAP gross margins in the mid-70s. GAAP and non-GAAP operating expenses are expected to be approximately $5.9 billion and $4.2 billion, respectively. For the full year, we expect operating expenses to grow in the high 30s range year over year, up from our prior expectations of the mid-30s. We are accelerating investments in the business to address the magnitude of growth opportunities that lie ahead. GAAP and non-GAAP other income and expenses are expected to be an income of approximately $500 million, excluding gains and losses from non-marketable and public held equity securities. GAAP and non-GAAP tax rates are expected to be 16.5%, plus or minus 1%, excluding any discrete items. Further financial data are included in the CFO commentary and other information available on our website. In closing, let me highlight upcoming events for the financial community. We will be at the Goldman Sachs Technology Conference on September 8th in San Francisco. Our annual NDR will commence the first part of October. GTC Data Center begins on October 27th, with Jensen's keynote scheduled for the 28th. We look forward to seeing you at these events. Our earnings call to discuss the results of our third quarter of fiscal 2026 is scheduled for November 19th. We will now open the call for questions. Operator, would you please poll for questions?
Thank you. At this time, I would like to remind everyone, in order to ask a question, press star, then the number 1 on your telephone keypad. We'll pause for just a moment to compile the Q&A roster. As a reminder, please limit yourself to one question. Thank you. Your first question comes from CJ Muse with Cantor Fitzgerald. Your line is open.
Yeah, good afternoon. Thank you for taking the question. I guess with wafer in to rack out lead times of 12 months, you confirmed on the call today that Rubin is on track for ramp in the second half. And obviously, many of these investments are multi-year projects contingent upon power, cooling, et cetera. I was hoping perhaps you take a high-level view and speak to your vision for growth into 2026. And as part of that, if you can kind of comment between networking data center would be very helpful. Thank you.
Yeah, thanks, CJ. At the highest level of growth, drivers would be the evolution, the introduction, if you will, of reasoning agentic AI. Where chatbots used to be one shot, you give it a prompt and it would generate the answer. Now the AI does research, it thinks and does a plan, and it might use tools. And so it's called long thinking. And the longer it thinks, oftentimes it produces better answers. And the amount of computation necessary for one shot versus reasoning agentic AI models could be 100 times, 1,000 times, and potentially even more as the amount of research and basically reading and comprehension that it goes off to do. And so the amount of computation that has resulted in agentic AI has grown tremendously. And of course, the effectiveness has also grown tremendously. Because of agentic AI, the amount of hallucination has dropped significantly. You can now use tools and perform tasks. Enterprises have been opened up. As a result of agentic AI and vision language models, we now are seeing a breakthrough in physical AI, in robotics, autonomous systems. So the last year, AI has made tremendous progress. And agentic systems, reasoning systems, is completely revolutionary. Now, we built the Blackwell NVLink 72 system, a rack scale computing system for this moment. We've been working on it for several years. This last year, we transitioned from NVLink 8, which is a node scale computing. Each node is a computer, to now NVLink 72, where each rack is a computer. That disaggregation of NVLink 72 into a rack scale system was extremely hard to do, but the results are extraordinary. We're seeing orders of magnitude speed up, and therefore energy efficiency, and therefore cost effectiveness of token generation because of NVLink 72. And so over the next couple of years, you're gonna you asked about longer term. Over the next 5 years, we're gonna scale into, with Blackwell, with Rubin, and follow-ons, to scale into effectively a $3 to $4 trillion AI infrastructure opportunity. The last couple of years, you have seen that CapEx has grown in just the top 4 CSPs has doubled and grown to about $600 billion. So we're in the beginning of this build out, and the AI technology advances has really enabled AI to be able to adopt and solve problems to many different industries.
Your next question comes from Vivek Arya with Bank of America Securities. Your line is open.
Thanks for taking my questions. Colette, just wanted to clarify the $2 to $5 billion in China. What needs to happen, and what is the sustainable pace of that China business as you get into Q4? And then Jensen, for you on the competitive landscape, several of your large customers already have or are planning many ASIC projects. I think one of your ASIC competitors, Broadcom, signaled that they could grow their AI business almost 55-60% next year. Any scenario in which you see the market moving more towards ASICs and away from Nvidia GPU? Just what are you hearing from your customers? How are they managing this split between their use of merchant silicon and ASICs? Thank you.
Thanks, Vivek. So let me first answer your question regarding what will it take for the H20s to be shipped. There is interest in our H20s. There is the initial set of licenses that we received. And then additionally, we do have supply that we are ready. And that's why we communicated that somewhere in the range of about $2 to $5 billion this quarter, we could potentially ship. We're still waiting on several of the geopolitical issues going back and forth between the governments and the companies trying to determine their purchases and what they want to do. So it's still open at this time, and we're not exactly sure what that full amount will be this quarter. However, if more interest arrives, more licenses arrives, again, we can also still build additional H20 and ship more as well.
NVIDIA builds very different things than ASICs. But let's talk about ASICs first. A lot of projects are started. Many startup companies are created. Very few products go into production. And the reason for that is it's really hard. Accelerated computing is unlike general purpose computing. You don't write software and just compile it into a processor. Accelerated computing is a full stack co-design problem. And AI factories in the last several years has become so much more complex because of the scale of the problems have grown so significantly. It's really the ultimate, the most extreme computer science problem the world's ever seen, obviously. And so the stack is complicated. The models are changing incredibly fast from generative based on autoregressive to generative based on diffusion to mixed models to multimodality. The number of different models that are coming out that are either derivatives of transformers or evolutions of transformers is just daunting. One of the advantages that we have is that NVIDIA is available in every cloud. We're available from every computer company. We're available from the cloud to on-prem to edge to robotics on the same programming model. And so it's sensible that every framework in the world supports NVIDIA. When you're building a new model architecture, releasing it on NVIDIA is most sensible. And so the diversity of our platform, both in the ability to evolve into any architecture, the fact that we're everywhere, and also we accelerate the entire pipeline. You know, everything from data processing to pre-training to post-training with reinforcement learning, all the way out to inference. And so when you build a data center with NVIDIA platform in it, the utility of it is best. The lifetime usefulness is much, much longer. And then I would just say that in addition to all of that, it is just a really extremely complex systems problem anymore. You know, people talk about the chip itself. There's one ASIC, the GPU that many people talk about. But in order to build Blackwell, the platform, and Rubin, the platform, we had to build CPUs that connect fast memory, extremely energy efficient memory for large KV caching necessary for agentic AI, to the GPU, to a super NIC, to a scale up switch we call NVLink, completely revolutionary when we're in our 5th generation now, to a scale out switch, whether it's quantum or Spectrum X Ethernet, to now scale across switches so that we could prepare for these AI super factories with multiple gigawatts of computing all connected together. We call that Spectrum XGS. We just announced that at Hot Chips this week. And so the complications, the complexity of everything that we do is really quite extraordinary. It's just done at a really, really extreme scale now. And then lastly, if I could just say one more thing, you know, we're in every cloud for a good reason. Not only are we the most energy efficient, our perf per watt is the best of any computing platform. And in a world of power limited data centers, perf per watt drives directly to revenues. And, you know, you've heard me say before that in a lot of ways, the more you buy, the more you grow. And because our perf per dollar, the performance per dollar is so incredible, you also have extremely great margins. So the growth opportunity with NVIDIA's architecture and the gross margins opportunity with NVIDIA's architecture is absolutely the best. And so there's a lot of reasons why NVIDIA is chosen by every cloud and every startup and every computer company. We're you know, really a holistic, full stack solution for AI factories.
Your next question comes from Ben Reitzes with Melius. Your line is open.
Hey, thanks a lot. Jensen, I wanted to ask you about your 3 to 4 trillion in data center infrastructure spend by the end of the decade. Previously, you talked about something in the 1 billion range, which I believe was just for compute by 2028. If you take past comments, 3 to 4 trillion would imply maybe 2 billion plus in compute spend. And just wanted to know if that was right, and that's what you're seeing by the end of the decade. And wondering what you think your share will be of that. Your share right now of total infrastructure, compute-wise, is very high. So wanted to see, and also if there's any bottlenecks you're concerned about, like power, to get to the 3 to 4 trillion. Thanks a lot.
Yeah, thanks. As you know, the CapEx of just the top 4 hyperscalers has doubled in 2 years. As the AI revolution went into full steam, as the AI race is now on, the CapEx spend has doubled to $600 billion per year. There's 5 years between now and the end of the decade. And $600 billion only represents the top 4 hyperscalers. We still have the rest of the enterprise companies building on-prem. You have cloud service providers building around the world. United States represents about 60% of the world's compute, and over time, you would think that artificial intelligence would reflect GDP scale and growth, and would be of course accelerating GDP growth. And so our contribution to that is a large part of the AI infrastructure. Out of a gigawatt AI factory, which can go anywhere from 50 to plus or minus 10%, let's say 50 to 60 billion, we represent about 35 plus or minus of that, and 35 out of 50 or so $1 billion for a gigawatt data center. And of course, what you get for that is not a GPU. I think people, we're famous for building the GPU and inventing the GPU, but as you know, over the last decade, we've really transitioned to become an AI infrastructure company. It takes 6 chips just to build 6 different types of chips just to build a Rubin AI supercomputer, and just to scale that out, to a gigawatt, you have hundreds of thousands of GPU compute nodes and a whole bunch of racks. And so we're really an AI infrastructure company, and we're hoping to continue to contribute to growing this industry, making AI more useful, and then very importantly, driving the performance per watt, because the world, as you mentioned, limiters, it will always likely be power limitations or AI infrastructure or AI building limitations. And so we need to squeeze as much out of that factory as possible. NVIDIA's performance per unit of energy used drives the revenue growth of that factory. It directly translates. If you have a 100 megawatt factory, per 100 megawatt drives your revenues. It's tokens per 100 megawatts of factory. In our case, also, the performance per dollar spent is so high that your gross margins are also the best. But anyhow, these are the limiters going forward, and $3 to $4 trillion is fairly sensible for the next 5 years.
Next question comes from Joe Moore of Morgan Stanley. Your line is open.
Great, thank you. Congratulations on reopening the China opportunity. Can you talk about the long-term prospects there? You've talked about, I think, half of the AI software world being there. How much can NVIDIA grow in that business, and how important is it that you get the Blackwell architecture ultimately licensed there?
The China market, I've estimated to be about $50 billion of opportunity for us this year. If we were able to address it with competitive products, and if it's $50 billion this year, you would expect it to grow, say 50% per year, as the rest of the world's AI market is growing as well. It is the second largest computing market in the world, and it is also the home of AI researchers. About 50% of the world's AI researchers are in China. The vast majority of the leading open source models are created in China. And so it's fairly important, I think, for the American technology companies to be able to address that market. And open source, as you know, is created in one country, but it's used all over the world. The open source models that have come out of China are really excellent. DeepSeek, of course, gained global notoriety. Qwen is excellent. Kimi is excellent. There's a whole bunch of new models that are coming out. They're multimodal. They're like great language models, and it's really fueled the adoption of AI in enterprises around the world, because enterprises want to build their own custom proprietary software stacks. And so open source models really important for enterprise. It's really important for SaaS, who also would like to build proprietary systems. It has been really incredible for robotics around the world. And so open source is really important. And it's important that the American companies are able to address it. It's going to be a very large market. We're talking to the administration about the importance of American companies to be able to address the Chinese market. And as you know, H20 has been approved for companies that are not on the entities list, and many licenses have been approved. And so I think the opportunity for us to bring Blackwell to the China market is a real possibility. And so we just have to keep advocating the sensibility of and the importance of American tech companies to be able to lead and win the AI race and help make the American tech stack the global standard.
Your next question comes from the line of Aaron Rakers with Wells Fargo. Your line is open.
Yeah, thank you for the question. I want to go back to the Spectrum XGS announcement this week, and thinking about the Ethernet product now pushing over 10 billion of annualized revenue. Jensen, what is the opportunity set that you see for Spectrum XGS? Do we think about this as kind of the data center interconnect layer? Any thoughts on the sizing of this opportunity, within that Ethernet portfolio? Thank you.
We now offer 3 networking technologies. One is for scale up, one is for scale out, and one for scale across. Scale up is so that we could build the largest possible virtual GPU, the virtual compute node. NVLink is revolutionary. NVLink 72 is what made it possible for Blackwell to deliver such an extraordinary generational jump over Hopper's NVLink 8. At a time when we have long thinking models, agentic AI reasoning systems, the NVLink basically amplifies the memory bandwidth, which is really critical for reasoning systems. And so NVLink 72 is fantastic. We then scale out with networking, which we have 2. We have InfiniBand, which is unquestionably the lowest latency, the lowest jitter, the best scale out network. It does require more expertise in managing those networks. And for supercomputing, for the leading model makers, InfiniBand, Quantum InfiniBand is the unambiguous choice. If you were to benchmark an AI factory, the ones with InfiniBand are the best performance. For those who would like to use Ethernet, because their whole data center is built with Ethernet, we have a new type of Ethernet called Spectrum Ethernet. Spectrum Ethernet is not off the shelf. It has a whole bunch of new technologies designed for low latency and low jitter and congestion control. And it has the ability to come closer, much closer to InfiniBand than anything that's out there. And we call that Spectrum X Ethernet. And then finally, we have Spectrum XGS, a gigascale for connecting multiple data centers, multiple AI factories into a super factory, a gigantic system. And you're gonna see that networking obviously is very important in AI factories. In fact, choosing the right networking, the performance, the throughput improvement, going from 65% to 85% or 90%, that kind of step up because of your networking capability effectively makes networking free. Choosing the right networking, you're basically paying, you'll get a return on it like you can't believe, because the AI factory, a gigawatt, as I mentioned before, could be $50 billion. And so the ability to improve the efficiency of that factory by tens of percents results in $10-20 billion worth of effective benefit. And so, the networking is a very important part of it. It's the reason why NVIDIA dedicates so much in networking. It's the reason why we purchased Mellanox 5.5 years ago. And Spectrum X, as we mentioned earlier, is now quite a sizable business, and it's only about 1.5 years old. So Spectrum X is a home run. All three of them are going to be fantastic. NVLink, scale up, Spectrum X and InfiniBand, scale out, and then Spectrum XGS for scale across.
Your next question comes from Stacy Raskin with Bernstein Research. Your line is open.
Hi, guys. Thanks for taking my question. I have a more tactical question for Colette. So on the guide, we're up, over 7 billion. The vast bulk of that is going to be from data center. How do I think about apportioning that 7 billion out across Blackwell versus Hopper versus networking? I mean, it looks like Blackwell was probably 27 billion in the quarter, up from maybe 23 last quarter. Hopper's still 6 or 7 billion post the H20. Do you think the Hopper strength continues? Just how do I think about parsing that 7 billion out across those three different components?
Thanks, Stacy, for the question. First part of it, looking at our growth between Q2 and Q3, Blackwell is still going to be the lion's share of what we have in terms of data center. But keep in mind that helps both our compute side as well as it helps our networking side, because we are selling those significant systems that are incorporating the NVLink that Jensen just spoke about. Selling Hopper, we are still selling it. H100, H200s, we are. But again, they are HCX systems, and I still believe our Blackwell will be the lion's share of what we're doing on there. So we'll continue. We don't have any more specific details in terms of how we'll finish our quarter, but you should expect Blackwell again to be the driver of the growth.
Your next question comes from Jim Schneider of Goldman Sachs. Your line is open.
Good afternoon. Thanks for taking my question. You've been very clear about the reasoning model opportunity that you see, and you've also been relatively clear about the technical specs for Rubin, but maybe you could provide a little bit of context about how you view the Rubin product transition going forward. What incremental capability does that offer to customers? And would you say that Rubin is a bigger, smaller, or similar step up in terms of performance for a capability perspective relative to what we saw with Blackwell? Thank you.
Yeah, thanks. Rubin, we're on an annual cycle, and the reason why we're on an annual cycle is because we can do so to accelerate the cost reduction and maximize the revenue generation for our customers. when we increase the perf per watt, the token generation per amount of usage of energy, we are effectively driving the revenues of our customers. The perf per watt of Blackwell will be, for reasoning systems, an order of magnitude higher than Hopper. And so for the same amount of energy, and everybody's data center is energy limited by definition, for any data center that using Blackwell, you'll be able to maximize your revenues compared to anything we've done in the past, compared to anything in the world today. And because the perf per dollar, the performance is so good that the perf per dollar invested in the capital would also allow you to improve your gross margins. To the extent that we have great ideas for every single generation, we could improve the revenue generation, improve the AI capability, improve the margins of our customers by releasing new architectures. And so we advise our partners, our customers to pace themselves and to build these data centers on an annual rhythm. Ruben is going to have a whole bunch of new ideas. I paused for a second because, I've got plenty of time between now and a year from now to tell you about all the breakthroughs that Ruben's going to bring. But Ruben has a lot of great ideas. I'm anxious to tell you, but I can't right now, and I'll save it for GTC to tell you more and more about it. But nonetheless, for the next year, we're ramping really hard into now Grace Blackwell GB200, and then now Blackwell Ultra GB300. We're ramping really hard into data centers. This year is obviously a record-breaking year. I expect next year to be a record-breaking year. And while we continue to increase the performance of AI capabilities as we race towards artificial superintelligence on the one hand, and continue to increase the revenue generation capabilities of our hyperscalers on the other hand.
Your final question comes from Timothy Arcuri with UBS. Your line is open.
Thanks a lot. Jensen, I wanted to ask you, just answer the question. You threw out a number. You said 50% CAGR for the AI market. So I'm wondering how much visibility that you have into next year. Is that kind of a reasonable bogey in terms of how much your data center revenue should grow next year? I would think you'll grow at least in line with that CAGR. And maybe are there any puts and takes to that? Thanks.
Well, I think that the best way to look at it is we have reasonable forecasts from our large customers for next year, a very, very significant forecast. And we still have a lot of businesses that we're still winning and a lot of startups that are still being created. Don't forget that the number of startups for AI native startups was 100 billion was funded last year. This year, the year's not even over yet. It's 180 billion funded. If you look at AI native, the top AI native startups that are generating revenues, last year was $2 billion. This year is $20 billion. Next year, being 10 times higher than this year is not inconceivable. And the open source models is now opening up large enterprises, SaaS companies, industrial companies, robotics companies to now join the AI revolution, another source of growth. And whether it's AI natives or enterprise SaaS or industrial AI or startups, we're just seeing just enormous amount of interest in AI and demand for AI. Right now, the buzz is, I'm sure all of you know about the buzz out there. The buzz is everything sold out. H100 is sold out. H200s are sold out. Large CSPs are coming out renting capacity from other CSPs. And so the AI native startups are really scrambling to get capacity so that they could train their reasoning models. And so the demand is really, really high. But the long-term long-term outlook between where we are today, CapEx has doubled in 2 years. It is now running about $600 billion a year just in the large hyperscalers. For us to grow into that $600 billion a year, representing a significant part of that CapEx, isn't unreasonable. And so I think the next several years, surely through the decade, we see just really fast growing, really significant growth opportunities ahead. Let me conclude with this. Blackwell is the next generation AI platform the world's been waiting for. It delivers an exceptional generational leap. NVIDIA's NVLink 72 rack scale computing is revolutionary, arriving just in time as reasoning AI models drive order of magnitude increases in training and inference performance requirement. Blackwell Ultra is ramping at full speed and the demand is extraordinary. Our next platform, Rubin, is already in fab. We have 6 new chips that represents the Rubin platform. They've all taped out to TSMC. Rubin will be our 3rd generation NVLink rack scale AI supercomputer. And so we expect to have a much more mature and fully scaled up supply chain. Blackwell and Rubin AI factory platforms will be scaling into the $3 to $4 trillion global AI factory build out through the end of the decade. Customers are building ever greater scale AI factories, from thousands of Hopper GPUs in tens of megawatt data centers to now hundreds of thousands of Blackwells in 100 megawatt facilities. And soon we'll be building millions of Rubin GPU platforms powering multi-gigawatt, multi-site AI super factories. With each generation, demand only grows. One-shot chatbots have evolved into reasoning agentic AI that research, plan, and use tools, driving orders of magnitude jump in compute for both training and inference. Agentic AI is reaching maturity and has opened the enterprise market to build domain and company-specific AI agents for enterprise workflows, products, and services. The age of physical AI has arrived, unlocking entirely new industries in robotics, industrial automation. Every industrial company will need to build 2 factories, one to build the machines and another to build their robotic AI. This quarter, NVIDIA reached record revenues and an extraordinary milestone in our journey. The opportunity ahead is immense. A new industrial revolution has started. The AI race is on. Thanks for joining us today, and I'll look forward to addressing you next week, next earnings call. Thank you.
Okay, there you go. NVIDIA Q2 2025 earnings is complete. Tanner, I'll take it to you. Reaction from what Jensen said.
Technically Q2 2026. But
Tanner's just that guy, bro. He is just
actually.
Nick, do you have legal permission to play this call? It's like,
yeah. Well, you know what? I wasn't napping the whole time. Your head was like, I'm wondering if you have neck pain. Your neck was like this during the call the whole time. I was worried about you.
Dude, I was texting my freaking. Never mind. I was gonna say my 10 side chicks, but no one's gonna believe it anyways. All right, go ahead.
I was like, bro, I got like 4 messages. What do you call me in your but no, I think that's a great way to wrap the call. Him just talking about the true immense opportunity. I think the market maybe questions whether or not Jensen can keep up the total market share of that build out. But if you are honestly questioning whether that build out is going to happen or not, I think that's a check yourself kind of moment. I mean, the opportunity here is just insane. NVIDIA is a major player. This might be a short-term reaction to guidance and uncertainty for China, but overall, the spelling out of what is actually happening here in this market is very real. And he talked about performance per watt, a ton right now. So over the next 5 to 10 years, while there still is a large energy bottleneck, Nvidia is still going to place number one in those markets. So I'm a big believer. I think that the AI market will continue to expand greatly like it has in the past year. Like he said, 10xing from 2 billion to 20 billion over the last little bit. And I remain very, very bullish and have zero, I'm not looking to trim or take profits or anything like this. I'm a long-term viewer of this of this company and the markets that it plays in.
Jose, your thoughts
Yeah.
on what Jensen said?
Yeah, same as Tanner. I mean, what we heard is just continue to see that bullish thesis. I mean, just the ending, right? He's talking about the Rubin platform expanding into millions of GPUs per data center, as opposed to where we're at right now in the hundreds of thousands. So long term, still there. He kind of hinted a little bit into kind of like a 50% kind of compounded annual growth rate within certain kind of data center space, which is crazy. I mean, that within itself is wild. One thing that really, I have a few notes, but one thing that really got me a little bit shocked was he did mention that H100 saw growth, H200 saw growth this quarter, even though it is the Blackwell era. It's just like they're so compute constrained that customers are willing to still take the previous generations just to get more compute. They even mentioned that a company outside of China bought the H20. The H20 is supposed to be a watered down version only for China, but if you're so compute constrained, other players are willing to take it so you don't lose it. So the H20 went into someplace else. It just, I think, solidifies the demand for compute. And he kind of talked a little bit about how right now the buzz is you're even seeing cloud service providers renting from other cloud service providers just so they can get the compute that they need. So like Tanner, long term, nothing really kind of worried me a little bit. Tanner, one thing I think you mentioned it, and maybe I misheard it when you first mentioned it. Before the earnings call, free cash flow did take a bit of a hit. This quarter. I thought you were. I thought it was something else. But I was looking at the numbers. It seems like I think what happens is Blackwell. A lot of their Blackwells probably shipped at the end of the quarter. So the date of outstanding sales or before kind of they get their money increased a bit. So I wonder if that's creating some of the impact. I would love to hear maybe your thoughts on what happened there. If you were able to look at the number, but I did see free cash flow definitely took a hit, and that's something that I want to kind of maybe look into a little bit closer.
Yeah, I didn't look into it closer, but I did see from Q1, we had such a major increase, and then now the margin was almost cut in half quarter over quarter. But I don't know what actually led to that. I didn't actually take a closer look. I just did notice that and brought that up earlier, but I have not looked at it more. I was just looking into or writing down the notes for the call mainly. But yeah, 50% growth in the AI markets. They said China is going to be growing at about the same per year, 50% per year. I also thought that was interesting. There was a quote that I wrote down.
They've never said that before, right? China 50%. They've never.
I don't think so. They said the $50 billion TAM before, but not the 50% growth. I don't remember hearing that. And then he said the opportunity for us to bring Blackwell to China markets is a real possibility. And so we have to keep advocating for the sensibility and the importance of American tech companies to be able to lead and win the AI race and help the American tech stack be the global standard. We've harped on this a bunch. That's why I was so mad about the ban originally. So hopefully, if that ends up coming to fruition, even if it is in the form of a B30 chip or something like this to help with national security, I still think that's going to be an amazing opportunity. Like Jose said, there's American companies or companies outside of China that are still trying to get hands on H20s. So it just goes to show you the lead that they have right now.
Couch, your thoughts on this quarter?
A couple of things. First up on the daily sales outstanding. So that was 54 days this quarter, up from 46 days sequentially, driven by timing of cash collections and Blackwell Ultra ramping late in the quarter. So Jose, you got that that answer here. Then with the China news, it does not surprise me, right? Because I think yesterday or 2 days ago, we've seen reports of China's goal for the next 5 years, 10 years, 15 years, with their AI expansions and leading chips providers and all of that. So 50% growth. First time we hear that number, but I'm not surprised because China is moving quite rapidly. Now remains to be seen how big of a role US companies will play in all of that and how big of a role Huawei will play in it. But no, for a quarter, I mean, stock is down, so of course people will say, oh, it's probably a bad quarter, but it's not a bad quarter at all. Far from it. I didn't catch the exact number again from the Spectrum business. Couple of $1 billion.
Yeah, $10 billion annualized.
Okay, I mean not bad
So
for a
$2.5
pretty young
billion.
business. Yeah, for a pretty young business.
Yeah.
What did you guys think about the Rubin comments? We have a bunch of new ideas and can't wait to tell you about breakthroughs that Rubin is going to bring, but we're going to wait for GTC. The stock did not care about those comments at all.
Yeah, I mean, for me, I think Rubin Ultra is definitely going to be the GOAT of this one because there's this. It seems like a huge shift between Rubin Vera and Vera Rubin Ultra. Just because one has NVLink 144, which is still here, and the other one's going to have the NVLink 560, whatever. So I think Ultra is going to be the crazy one. In forms of new products, I can't. I don't know. I'm pumped for GTC, which is still almost a year away.
Which those numbers are a little deceiving, right? They broke it down in the Ultra, counting the dies rather than the individual chips, right? So it's a little bit different, but yeah.
Yeah, they started with this one, so I think even for Ultra, it's called the NVL 144, but it's 2 dies, so it's really 72 GPUs. It's same going to be for the Rubin non-Ultra. It's still 72 GPUs. For the other one, I think it's 4 dies on the Ultra, so it's you divide that by 4. So, but it's still kind of a growth between what their actual GPU theoretically is.
Is it going up from 72?
Yeah. So it still
That's
would
crazy.
be so it would still be a growth from 72.
Yeah.
Good growth for Micron and SK Hynix as well, and maybe Samsung if they start to catch up. But yeah.
Everything Jensen said pointed to a future where AI is going to be more prevalent, where a data center, I think he said $1 trillion by the end of the decade, is going to be continuing to compound. I see a decent amount of bearish tweets. I think people just want Nvidia to fail. And we're all objective here because we all own Nvidia stock. Neil more on AMD, but like if we thought there was a red flag, we want to sell too, right? We want to be left holding the bit. So we're not trying to delusionally be optimistic, but the tweets I'm seeing and the commentary from the bears is just like it's nonsense. Like there's not a real thesis that I'm seeing here or a red flag that is aggressive. So here's a question that I think is the most bullish on this quarter. Colette said 2 to 5 billion they expect next quarter. So Tanner, that would mean the guide goes from 54 to 56 to 59. Where do you think that plays a role in terms of the psychology of what guidance looks like in Q3?
Yeah, I mean, it definitely was important. I think it's even more bullish than that. He said we could ship 2 to 5 billion in H20 revenue in Q3, and if we had more orders, we could bill more. So they're leaving the upside to go even more than that. But I think the market just cares about if geopolitical issues, go away, and that's not 100% clear just yet. So the market, I think, understands the bull case for Nvidia, but is not necessarily, pricing. There's too much uncertainty, right? The market's okay with good news. The market's okay with bad news. They hate uncertainty. And unfortunately for Nvidia right now, there's many aspects of their business for their second largest, country, which would be China, to impact their sales overall. So, yeah.
Yeah, Neil, your thoughts, or we'll do Neil first, and I would say, Neil, your thoughts on, do you think that sets up for a really good beat and raise going into Q3?
I mean, it's not like they didn't beat today, right?
Yeah.
They did beat. Just the market wanted more. And 3 months from now, we might already have a rate cut. So it depends on what the stock price will be then. If we're, again, priced to perfection, if we do have some trade deals or worst case scenario, we do not have any trade deals and Nvidia does not get the license for the Blackwells for China, then of course the story might change here. But for now, and I mean, Wall Street has been wrong about this for a while, right? They've been playing catch-ups. Okay, we all got caught off guard at the start, right? When suddenly Nvidia grew 80% quarter over quarter, we're like, okay, what the heck is this? But it took them like a year and a half for Wall Street to actually understand, because it's now they beat, but they don't beat by much, which, okay, makes sense. I mean, after 2 years, you would think that Wall Street understands the story and the estimates are quite close to reality. But now it feels like Wall Street and some analysts are like putting up numbers that don't make any sense. I mean, Jose and myself talked about this with AMD when we started the year. Like AMD's AI revenue estimates were what, $13 billion. Now it's 8.5 to 9 or something like that, which is a bit more realistic. So again, Wall Street is Wall Street. I think retail has crushed Wall Street in the last 5 years anyway. So who cares what these guys are thinking? But yeah, Nvidia will be fine. Jensen will be fine. GTC next year will be very interesting. And everybody's going to buy more GPUs anyway. So
it's not all about the beats, right? Like, let's just look at the fundamental growth. It's 56% growth on data center revenue. I mean, forget the 1% surprise versus 2% surprise, which we usually have seen over the past quarters. I mean, just fundamentally, whenever you look at this company on a PE basis, on a PEG rate, like, pick the value. We can look at it from free cash flow. It is not as expensive as what you would think for being the number one player in a market that's expected to grow by 50%. Yeah. Costco is growing, or is a more expensive name on a trailing 12-month basis than Nvidia. Okay. This is a $3 to $4 trillion market that Nvidia plays a 75% role in for, or, you know, till the end of this decade. What are we talking about here? You know, so Wall Street is now understanding that they understand the channel checks. They have relationships with the buyers. They understand the supply chain a lot more now, but that doesn't change the fact that they're growing by 50+%. So, yeah, Nvidia is going to do this. Was a good quarter, and I think that they're going to continue to do well.
I was just
hey, I mean, Costco is a granny shot. I'm not anti Costco, but it's just a good name that has 2% margins to compare against a company that has, you know, 30x their margins. And
yeah, but you have that combo deal. You have that combo deal, which is probably
Nvidia
better than
no
a
hot dog.
GPU. Exactly.
The hot dog drink combo, Nvidia's at $0. So that's true.
It also puts into context, if Nvidia was like 250, you can make an argument of like, all right, the market's like, but like and that would be way more expensive than Costco. It's not there. People are willing to pay more for a company with 2% margins, which means, and I like that. I like that it's not at 250. I like that there's not that much excitement and euphoria, and there is this wall of worry, but that does not mean that this thing's heading back to 120 because the story is done. I mean, it just feels like that's not the case. Jose, what do you think about the $2 to $5 billion potential China revenue coming up next quarter?
I mean, I don't know. I mean, think obviously, I like the fear on the stock. It helps it stay somewhat reasonable. All right, just how you were talking about the 2 to 5 billion. Obviously, if they get it accepted, it's going to be great. And I think they're obviously sandbagging these numbers. They mentioned it. I think certain China customers are just really waiting to see if approvals happen before they place their orders. And that's why they mentioned if we had more orders, it would actually be higher. I think there are certain Chinese customers that would rather just wait to see actual approvals before sending some of those orders out. So overall, China market, they're going to have a strong quarter three if that opens up. To me, the one that gets me more excited is quarter four. I think Jensen talked about it. We kind of heard it from, he mentioned CoreWeave, how CoreWeave is going to be spending a lot of money in quarter four for Blackwell Ultra. I don't think they're going to be the only ones. So I really think quarter four is going to be a pretty crazy quarter, as I don't know if anybody follows CoreWeave in the chat, but they expect to spend $20 billion or so in CapEx this year. In the first 3 quarters, they're only expected to spend about 7-8 billion. The other 12 or 13 billion is coming purely on quarter four. So CoreWeave is one of them, but there's a lot of preferred partners out there that have that GB Ultra. Colette mentioned that the Ultra, the transition from GB200 to GB300 on their factories went pretty smoothly, and now they're shipping, I think, 1,000 racks per week, I think she mentioned, which was kind of like the GB200 number as well. So guidance for Q3, I think, is great with or without the China numbers. I can't wait. I know I'm already, as a long-term investor, that's what gets me excited. What's next? What's after Q3? Q4 already looks crazy. What's after Q4? You have Ruben, which he talks about million GPUs. All right, what's after that? Robotics, and the list goes on and on. So that kind of roadmap gets me excited. So Q3, great, but super pumped for Q4.
Yeah, look, I'm super pumped as well. And even though Chad is tweeting screenshots of me sleeping, I wasn't sleeping. The call was just, Jensen's voice is so soothing. You tend to, just like not stare at the screen. So a little nodding off. It does. I really wasn't sleeping, but it does look like I'm sleeping. Look at Tanner. Tanner's actually sleeping. Look at this. He's got his eyes closed.
Bro, I just
no, your eyes were closed, bro. There you go. No, but in general, like this call was not that exciting, but it's also like we know the story, we know the quarter, and the call, the earnings was exceptional. But I think even Jensen is like tired of reiterating the same exact story he's saying over and over again. You could tell he was just like, gasping at some point of just like, this is the thesis again. Let me explain it if you guys still don't get it. And as long as CapEx is not slowing down, then I think the growth won't slow down either.
I think that's the case for every company that has to come on and do a quarterly report. Right?
Yeah.
If the theme is the theme, then they have to come on and repeat themselves. But I think out of any company that we could have picked, this is the one that is, moving the quickest in terms of the new products that they are releasing on, a semi-annual basis, where they continue to find new customers, and those customers are re-upping and setting up new data centers that are, 10x larger than the data centers that they're setting up before. I mean, that's the thing, right? You're a big Palantir investor, and one of the great things about Palantir is that their customers speak for them. But you can go to Meta, Google, Amazon, any of these customers, and they will tell you the bull case for Nvidia. Jensen doesn't even need to explain it. So that's another thing too. This is not a catalyst-driven name per se, where the stock needs to move on their earnings. Their earnings can be based on OpenAI and comments that Sam Altman has to say. Zuck, what Sundar Pichai or any of these leaders have to say about artificial intelligence can make Nvidia move over the 3 months between their earnings. So it's not like we have to wait 3 more months to wonder if Nvidia can then now push to over $200 per share. This can move on a lot of different news, or even what Trump has to say. Let's remember how big of a pawn in the political game Nvidia actually is. So there's a lot more room for Nvidia to move, not just on earnings day.
And I mean, the company did add $1 trillion in the last 3 months in market cap.
Yeah. Yeah, this is a $4.3 trillion company. So as much as we wanted it to go higher, it's like, it's nice to see the earnings come in, the stock consolidate a little bit, maybe go down a couple of percentage points, and all those multiples come right down as the growth is still phenomenal, even if the stock is not going that much higher. I think that's it. Let's do final thoughts. Jose, I'm going to leave everyone's YouTubes and Twitters in the chat right here, also in the description, but
where can people find you, Amit? You're always shouting me out. I mean, I've got people in my audience that don't know what channel you're on.
Okay, so you got to put my link in the chat. You got to put my YouTube channel in your chat, but I'll put everyone else's right here. Jose, final thoughts on this quarter.
AI is here. It's definitely the thing. I mean, I don't know what to say. I mean, I think AI is going to be that revolutionary thing, and I just want it to continue to grow. I mean, Nvidia is going to continue to grow with it. There was nothing in this earnings that was scary for investors. Obviously, short-term price target might look bad. Earnings were okay. Guidance was great, and I'm super excited for the future. So, see you all in 3 months for this 4-way call. But yeah, pretty cool.
Neil,
my comment, please.
Yeah, I think you'll see Jose in a couple of hours on his channel with a video reviewing everything. And then every other day, you'll see him talk about Nvidia and CoreWeave and AMD as well. And
you'll probably see him on my channel soon. So there you go.
Exactly. And actually every morning with me, we're talking about some interesting companies. But I mean, If the stock was up 5%, would people say something else? Would this be like the best quarter ever? I don't know, probably, because price drives sentiment, but I don't know, it doesn't really change much. It's a good quarter, good commentary. Story still continues. By the way, CrowdStrike is only down 2% now, so it like recovered almost everything. But yeah, Jensen is there. He's playing also a political game. Don't forget about that. Like everything he said is pretty much calculated. Like when he said about, oh, we need to make sure that US tech is being used around the world. He's like, he's talking the talk to sweeten maybe a future potential deal here and there. But yeah, Nvidia is not going to disappear tomorrow because stock is down 3% and maybe it's not growing 100% year over year anymore or 50% quarter over quarter. This is still a company worth over $4 trillion that grows faster than a lot of shitcoins. And that's my end statement here. Voilà.
Amit's too humble to put up my comment of his YouTube channel, not acting like there's 3 other channels, but
I put it on my side, but I'm pretty sure everybody here knows Amit here.
I didn't even see it. But there's my channel as well for Tanner's audience to come on my channel. Tanner, your final takeaway from what Jensen said, and I guess your also reaction to the stock as a result of that.
Sorry, what?
Your
No,
final
I
takeaway from the quarter.
No, I've already said it. Like I'm positive. I've got nothing else to add. I've already said essentially everything I wanted to say. Happy with this. Excited to see. What we didn't talk about? There was a comment that he said about the expected capex spend between all 4 names will be 600 billion.
You're right.
I did my math. That didn't add up. Like, how does that work?
And was that a 2030 thing or was that next year?
No, he said this year.
This year? I thought he said 2026 on that one.
It could be next year. Sorry.
Let me look at transcript.
So he says here, as we continue to deliver both Hopper and Blackwell GPUs, we are focusing on meeting soaring global demand. This growth is fueled by capital expenditures from the cloud to enterprises, which are on track to invest $600 billion in data center infrastructure and compute this calendar year alone, nearly doubling in 2 years.
This
this
calendar year alone. Mm-hmm. And then he also says it's from the 4 big names, which that's what I was surprised about.
Dude, if that's going to be a multi-trillion-dollar capex cycle, like you either believe Jensen or you don't, if that's the case.
Because that's the other thing, right? Is like Meta can tell their shareholders on a public space how much they're expecting to spend on AI. But what Zuckerberg tells Jensen is probably a more clearer picture of what they actually expect to spend, because they want to make sure that they have the chips ready for them whenever they come to order.
And that's a great point, Tanner. I mean, many people don't understand that for this to happen, they talk about it. It's about a 12-month lead time from wafer to rack. And that's why Nvidia kind of has this supply constraint. It's not that they can't make the chips or anything. It's they just need to know the proper type of demand that they need to make those orders. So companies like Meta need to go directly to Nvidia and say, next year, not this year, next year, I need to purchase this amount of chips. If I get that wrong, that's on me. But that's the main reason Nvidia's kind of supply constraint is because it takes a whole year for that kind of from production to full rack system goes on tag. So he definitely has a way better picture of what next year's revenue guidance can be. And he keeps telling us, I mean, he keeps saying, he's like, I expect growth. He doesn't give us a real number, but he tells us pretty much in every earnings call, he expects this number to continue to go up.
Yeah, and I think the most important thing for us as investors to continue to qualitatively and quantitatively analyze is there a real world impact from AI? Whether it's in our personal lives, in our friends, our family, what we're seeing in enterprises, because that will likely lead to capex continuing to go higher if companies continue to see an ROI or results from AI, because then they're going to want to upgrade to Rubin and more advanced models. So I think as long as that trend is intact, which Jensen obviously believes it will be in track, and especially with the self-driving ultimately becoming as amazing as we think the Tesla robotaxi thesis can become, and then you put Waymo in there and from robotics. So if that's the case, yeah, 600 billion going to 1.2 trillion by next year. I mean, like, that's not crazy to imagine. And obviously Nvidia would be a massive beneficiary of that, and Broadcom and Micron and all those other guys.
Yeah, the 600 billion, I'm just going over the transcript, and like one time they mentioned like only the top 4 hyperscalers, the other time they mentioned
Enterprise players,
enterprises, and
yeah.
so it's like which one is it? Like, okay, it's 600 billion, which is still a big number, but is it only for, or is it for and all the other enterprises? So that's a big,
Yeah, because 600 would make sense if it was all the names, but
yeah,
across only the big 4, that would surprise me.
Yeah,
I'd see that closer at 400 or something.
Right. They did say also, this is another stat if you guys didn't catch it. One customer drove 23% of Q2 sales, 10.8 billion, and another was 16%, 7.5 billion. That's 18.3 billion from 2 customers tied to compute and networking, which is basically their data centers.
Well, their biggest is Microsoft. I don't know what number 2 would be, but it would be one of the, obvious names.
But so people think that's a concentration risk, but in reality, if those companies are continuing to accelerate, and Microsoft's probably one of them, that should continue to go up in terms of the amount that they're buying from Nvidia. Also, the sovereign revenue. This is the first time I heard guidance. They're expecting it to be 10 billion this year, and they expect that to grow 100% next year as well. I think it might be 20 billion.
Yeah, he said 20 billion this year, which grew already 100% compared to last year. So already just 20 billion from the sovereign nations. And yeah, I mean, you would see that concentration of big players. I mean, Google, Microsoft, like Tanner mentioned, and Meta are the ones really making these orders. And that's one thing that I guess Jensen is pretty excited about, the enterprise space. He mentions the pro servers, which are for the enterprise. He expects it to be a multi-billion-dollar product already. So that's the enterprise market coming in. And obviously we have kind of those other players like CoreWeave, like Nebuous, that are also coming the preferred partners of Nvidia for some of these solutions to help diversify outside of those main ones.
Agreed. I think this is going to be a story that plays out for the Bulls over the next 5 years, but it was up a lot going into the print, and as a result, it's down 2%. So that's what you got.
Boys, this was fun.
This was awesome. Thank you, everybody, for being here. Everyone's YouTubes and Twitters are in the descriptions. Appreciate it. We will see you guys in 3 months to cover NVIDIA's earnings next time. Thank you, everybody.
Bye-bye.
Bye, guys.
Bye.